The Midday Show. That is your girl Adara. I'm Sharif, and as usual, we're going to start waiting for the chat to populate before we get into our roll call and start shouting out some names, give some people a chance to migrate over from the other stream. I know we already had a few people waiting. There we go. We got Bears versus Bulls in the house. Shout out to you, my man. You're first in the chat, as you should be, obviously.
Shout out to Bears versus Bulls.
Yeah, Bob Dubb, Alex Davis, Juan Padilla, Dad, Trader, Futures Trader Extraordinaire, John E. We got Fee Rhymes with AMC, and we got She Is the One named Sailor Moon. I'm going to do that every time.
Yeah, I know. You enjoy it, so why not? Yeah.
The Crazy Stitch Lady. We got Big Michael Lloyd in the house. We got Ryan, Eagles Guy, Airsoft. Ooh, I used to have one of those back in the day. Maple Squash, I like that name.
I love
Fred
that name.
Jones. All right, populating like crazy. Shout out to everybody. Thank you for joining Adara and I on a special episode of Learn How to Trade. We're going to be talking today, guys, about how to trade economic events like the one we had this morning.
Yeah, I mean, also like the one we're going to have tomorrow with that PPI print, because today we got the CPI print. So I think, yeah, we specifically, Sharif was really smart, and we specifically had this lesson today. I said specifically really weirdly there. But yeah, just so we can actually reflect on what just happened and how you would trade it, because we're going to be like metaphorically back testing in real time for today. Let's do it.
Yeah, and I gotta shout out Short Smeller there, because he's like, how about them boys? And all I can say is, here we go. Anybody knows anything about football knows exactly what I'm talking about there. So shout out to you, my man. Oh, Sailor Moon, don't disappoint me like that, Sailor Moon. You said go Lions. The Cowboys are gonna play the Lions in a couple of games. Sailor Moon, let's stay in our good books here.
Yeah, like Sharif singing your name. Like, come on.
Playing around. Cheer for whoever you want. Forget about me and what I care about, what I think. All right, let's talk about the lessons today. So the first step, guys, is what are we talking about? Like, we already know what we got today. We got CPI. It came in line with expectations. Kind of a tough one to trade when things come in line with expectations, because you don't really know what to expect. Do we trend up? Do we trend down? Do we consolidate sideways all day? It's the tougher of the bunch. At least it's been my personal experience when we come in line, whether it's the jobs number, whether it's GDP, unemployment rate, what have you, non-farm payrolls, CPI. When we come in line, I feel it's always a little bit tougher to trade. But typically, we don't always come in line. We usually come in a smidge above or a smidge below. And the times where it's been really profitable to trade is when we have big beats or big misses. And we're going to be talking about what to do in each of those circumstances. But first and foremost, you gotta gather the data. Yeah, that was a whole lot of G's. You gotta gather the data there. And what do I mean by that? Let's talk about the first thing there, gathering the basic data. First topic here. Well, for today's economic event, it would have been, well, what is the expected CPI print? Now we're gonna talk more about headline rather than core, because it gets a little bit nuanced. We're talking about the headline inflation number. What was the headline inflation number expected? What we're talking about is the expected results. Second, we want to see what we got previously. What was the previous release? What was the number there? Okay, and when you get the previous results, you compare it with the expected results this time around, and here's how to use it. This is the benchmark for the actual release. In general, higher than expected is a positive number. Well, in CPI, it's kind of the opposite, right? Because it depends really on the economic climate in which we're in. I got to stop here and preface everything that I'm going to say, okay? In normal times, when you get a lower unemployment rate, it's bullish for the market. However, we've been in this special circumstance as of late where bad numbers have been good and good numbers have been bad. This is an outlying situation when viewed from a wider time frame. So what am I talking about? Well, if we got higher than expected unemployment on the last print, the market likely would have trended up. Why? Because the Fed has been looking for weakness in the job market in order to start cutting, or possibly start cutting rates. The longer the job market stays strong, the less likely the Fed is going to cut. That is not the normal circumstance. In normal times, a low unemployment rate is typically bullish, not bearish for the market. So we need to know the context in which we're trading. That's first and foremost. Now, after that, after we know the context in which we're trading, we're going to actually look at the different data prints from previous, expected, and etc. So when I say that in general, a higher than expected result is usually good, again, it really depends on the data point, whether we're looking at jobs, whether we're looking at CPI, and it depends on the context in which we're trading. So for CPI, obviously a higher CPI in this particular case, not good. We're looking for lower CPI because we want the Fed to start cutting rates. And they start cutting rates, typically that helps equities go up, okay? Then we're looking for the range. What do I mean by that? As traders, we are looking for a break in the pattern. To know the range of releases helps us recognize quickly once the release appears. If that number is out of the range, probably the market will react firmly. So if I'm looking for, if the expected was 3% year-over-year headline inflation, and we get a 3.1 or a 2.9, that's within a range. But if we get 3.3 or 2.7, you're going to see a quick market reaction. And so understanding the range, the expected range where you're not going to get an aggressive print, you need to be able to determine that as well. And that's we're going to talk about how to do that by going and looking at previous prints and previous expectations and seeing how the market reacted. We'll get to that in a minute. We're just doing the data collection for now. So you're looking for the range. And then you also want to figure out what would be a surprise range. So like I said, a 3.1 print on an expected 3 print, not so bad. A 3.3, a 3.4, that qualifies as the surprise range. So how to use the surprise range? Using the surprise range from the past 10 months, for example, say you did 10 months worth of data analysis, we can see that a negative surprise is much more likely than a positive surprise. And that's one thing we're looking for as well. In the past year, when we looked for possible surprises, meaning, in the case of CPI, something 0.3% plus or minus the expected. Let's just say that that's the benchmark. 0.3%, that would or above or below. That would qualify as a surprise. Well, how did the market react when it got a surprise? When it got a surprise below, what was the reaction? What was, how vociferous was the move down, or how vociferous was the move up? Right? If you qualified for that surprise print, okay? And what was more likely? Were we more likely to have surprises higher or lower than the expected print over the past 10 years? So if you've seen that the market has reacted, in a certain way, and most of the surprises have been surprises to the downside, well, a surprise to the upside, you should expect that it would be an even more vehement move than a surprise to the downside, because over the past year, you've typically had surprise to the downside, not surprises to the upside. So what you're doing is you're trying to, gauge how the market is going to react based upon, the historical moves and based upon possible different outcomes. So just to review before we go on to the next topic, this is the data collection stage. You should typically do this the night before. It shouldn't be done the morning of, okay? You're gathering the previous release, the expected results this time around, the range, what can be said to be within, this is the narrow range, 0.1% to the high side, 0.1% to the downside. It's going to be different for different economic prints. And then the surprise range. Over the past year, how many times did we have a surprise range? Were the majority of them to upside surprises or downside surprises, okay? And then if the majority of them were downside surprises, we should expect that an upside surprise is going to be met with more vehemence by the market. Follow me?
Yeah, absolutely. So I'm just typing out some questions I have for myself throughout this as we continue.
Cool.
Yeah, no, I
any
think
questions before we go on?
Oh yeah, okay. So yeah, this is the question I had. I don't know if this is really going to be, but I was just typing it so I remembered it. So basically, this is I think a lot of this is if we're specifically preparing to trade for the CPI, PPI, data, etc. print. What happens if we're basically if you're already in a stock, is there any way to kind of, is this also helpful, I guess, if you're already in a stock to mitigate the impact that a print might have?
No, so everything we're going to talk about from here on forward is before the actual print. So all the stuff that we are doing for prep should have been done either the night before or before 8:30 a.m., well, which is when we get CPI.
Yeah.
It doesn't, sometimes we get prints at 9:15, the ADP, for example, right?
So this is specifically for these early morning pre-market ones?
Well, typically we get the economic events in the morning, right?
Yeah, thank you. Sorry, I just wanted to ask that.
Yeah, that's fine. So just to reiterate, you have to gather 4 pieces of data here for the data gathering stage: the previous release, the expected results, the range, and the surprise range. And the surprise range requires you to go and do a previous look at how the market reacted. Typically what we're looking at here is the ES, the NQ, the Russell, the major indexes. That's what you're looking to gauge here. You're not looking yet at individual names. You're looking at the market reaction, okay? So that is step 1. Step 2, we're going to back test, and it is a lot easier than what it sounds like. You don't actually have to have a platform that allows back testing, but just in case, I want to let you know that back testing is available using trade ideas. You can go as far back as 3 months. Shout out to Michael Noss and his crew. You get 25% off, by the way, if you use there it is right there. Thank you, Ram. Trade ideas. TraderTv.live is the code. Oh, and that, I forgot. Oh, perfect. Ram. We're brought to you by Search Trader. Account funding of up to $1 million. Keep up to 90% of the profit. Enjoy relaxed trading rules with an 8% max trailing drawdown on all new accounts. Shout out to the folks there at Search Trader. I really want to see this big giant bull.
I was just thinking about the big metallic bull.
What a monster that bull is.
It's something.
Yeah,
it is a monster.
So iconic, eh?
Well, yeah, and I love like the way they must have sculpted that to have it like slightly tilted and its feet are all flat and its little claws.
It looks quite angry. I'm not gonna lie.
I mean, I think
like
he is angry. Yeah, he's charging into the bull market. I just think we deserve a brass bear as well because like maybe the bears need some love. I don't know.
Right. Well, the Chilean Nightmare says also very polished. Oh. And I have to tend to agree with him. You know, I can see some people drinking at night and doing some things that they shouldn't be doing around that thing, but whatever. That's neither here nor there. But yeah, shout out to our sponsors, guys, Trade Ideas. Search Trader. All right, sorry, I digress. Step 2, back testing. We should also mention that there is back testing on Thinkorswim, but we don't deal with them. Now that we understand the landscape, okay, that we're trading in, we can prepare to potentially trade the release. We can't be certain about the future, but as a trader, the historical information is all that we have. You can also use your own experience, obviously, your own system that uses what you've seen in the past and what has happened in similar situations. So obviously experience plays a major factor in here, but it's not the end all and be all. By back testing before the release, we can learn what instrument we should trade after the release because we prefer to trade the instrument with the highest correlation to this event. And I'm going to make my example about that in a second, but I want to read on here. We can explore the market logic for this specific event using back testing or manual research. We don't know if the results will be negative, positive, or as expected, but by doing the work ahead of time, we can determine what the best trading strategy would be for each of these possibilities. This allows us to have a clear idea of how to capitalize on each situation and trade calmly and efficiently rather than panicking after an unexpected result. And trust me, there will probably be a degree of panicking given how quickly the market moves after a surprise positive or negative CPI, jobs, non-farm payrolls, you know what I mean. When there is a surprise move, the market will move very aggressively, typically because the algos are really going gung-ho there. And as a human, you know, you obviously can't react as quickly. The same approach can be used, eh? Oh, Neil's like, yo,
Neil's
bro.
like, algos?
Neil's like, the algos ain't got nothing on me, man. I'm Neil Roberts. I will dominate these algos. He's warming up.
Yeah, he's like, watch out, algos. He's got them on watch.
Get those stretches in, baby. The same approach can be used with negative releases to get some idea about what instruments are correlated in which direction. All right, so what the hell am I talking about here? So what we need to do is we need to do, you know, a span of research for, like, say, the last year. Let's take the last year, for example, okay? And we already looked to see what the previous CPI prints for the past 12 months has been. And we already, in the first stage, determined whether there were more surprise down prints or surprise up prints, okay? So we've already determined that. Now what we need to look at is to see what instrument we can trade that is directly or is most correlated with the print. So if we get a below than expected CPI print, we know that for the current economic climate, that is supposed to make the market go up. We get a below than expected CPI print, we're looking for the market to go up. So what I could do is I could look at, oh, Ram, but I have my Invisalign in. Why are you teasing me like this, bruh? Ram's distributing chocolates here, and you know, are you leaving?
Yeah, I am.
You're taking off?
Yeah.
You have another date?
No Ram.
No Ram for midday.
Hi, thank you for the chocolate.
See ya. I like how she just did that.
I also like that she said bye-bye because it's in theme with Ram.
Right? Oh.
Right? I don't know if that was intentional, but I enjoyed that.
She just like mic dropped.
Yeah.
She's like, I'm leaving.
Mike
Here's some
drop.
chocolate.
Yeah.
Mike drop.
I had to.
All right, so basically what we're looking for here is to see what instrument is most correlated with the CPI downprint, okay? So we talked about getting a lower than expected number. Well, what's better to trade for something bullish? Is it going to be the NQ, the ES, the Russell, the Dow, even the DXY? So what you're looking for here is to do your chart analysis on the release of the previous print. So what you're looking for, let's say, the November print, the November that rocketed up the market. What moved more aggressively on that below than expected CPI print that we got in November? Was it the Russell? Was it the NASDAQ? Was it the ES? Was it some sort of Forex? Was it an equity play like Apple or Microsoft? So what you're looking for here is to see what instrument you can trade that has the most correlation with a particular print, okay? So that's what you need to do at this particular stage, all right? So that is the purpose of the back testing, to see where you can find the most correlation between the move in the economic print and the move in an instrument. Any questions before we go on to the third day?
Yeah, so basically, I guess, so what you're doing is you're generally looking for more correlation, so you're, I guess, prepared then. So if, like, let's say you have really prepared to trade X stock or asset or whatever. I'm just going to use AMD as an example. Let's say you really want to, like, this is a bad example, but let's say you really want to trade AMD because you've noticed that there's a surprise to the upside, AMD will like run or something like that, right? But then I guess if we have a surprise to the downside, would it make, I guess, more sense to short, or would it make more sense to just not touch that stock at all?
Okay, great question.
I don't know if that's a good question.
It is, because it shows I need to re-explain because I didn't do a good enough job explaining this. All right, so here's what we're going to talk about. Now, I don't have a bias for any particular instrument that I want to trade.
Okay.
What I'm looking for here is to see when the market popped up in November on that big CPI print, what was the instrument that popped up most aggressively? What was most correlated with that move up on the market? Is it the NQ?
Okay.
So I should not have a bias
so you're literally just looking for whatever's moving the most.
Exactly.
Okay.
I shouldn't have a bias as to what I want to trade. The data should point me to, Sharif, you should be trading the ES if we get a below than expected CPI print, because what happened on the 3 of 4 occasions, the ES outperformed the NQ on a below than expected CPI print. I'm not saying that's what happened. I'm just giving you a random example.
No, I appreciate that.
So it's incumbent upon me to see what is most correlated. Fair?
Okay, yes. And then, so then I guess my other question is, so then
Go for it.
It would make more sense. Like it's still like normal planning, right? So it's like, for example, you would only trade it then if the setup occurs. So if the setup doesn't occur, you don't touch it.
No, I should. I wouldn't. Exactly. Very well stated.
Thank you. I just wanted to clarify that part.
Yeah. So I have to have certain outcomes ready. Do we get a beat? If we do get a beat on CPI, if it comes in above expectations, is it within the range? Remember, in the first part, the data gathering, we gathered 4 pieces of data. Let me show up the, perfect, because I think it's going to help people to see my notes here, because then they're going to be able to see it, right? we are getting the previous release, number one, the expected results, and the range. So if I have a range here of, say, 0.1 or 0.2 plus or minus the CPI, I know within that range, the market typically won't react. However, it falls into the surprise range if it's beyond that.
I see, okay.
And you see what I'm saying?
Yeah, that makes sense.
And so I should have a game plan for how I'm going to trade or not trade.
Yeah.
Or not trade.
Sometimes I feel like sitting on your hands might be part of the game plan.
Absolutely,
yeah.
Bang. I'm going to hit the bang for that because you're absolutely right. We're going to get to that in a second. So, yeah, I just want to go back there to explain that last part, all right? Now, I've gotten the data. I've done the back testing so far, so I know what the last 12 months have shown me with respect to CPI. I'm able to categorize them as within the range or a surprise print, and whether most of them were down or like a surprise down print or a surprise up print. And what I'm looking for is if the majority of the 12 months, if the majority of the surprises were surprise down prints, then I should be cognizant of the fact that if we get a surprise up print, we'll have more of an aggressive market reaction because the market's already done several surprise down prints, okay? Let me zoom back out.
So basically just more prepared for what to expect, and then you can plan your trading based on past reactions to stuff.
Exactly.
Okay.
Okay? Then, after the release, so now the numbers have come out, 8:30, sorry.
It's okay, I needed that.
Yeah, the numbers have come out, and now we're gonna do a real-time analysis or after the fact, okay? Once the news is released, you'll be in a different situation. The markets start immediately to move faster, become more volatile, and sometimes move without logic, sadly. To trade in that situation, you must do three things. One, you must understand the new information. Two, analyze that information. And three, plan for the trade. So we understand the new information because we've data collected in the first step. We've analyzed that information because we can now make comparisons to what the new print is relative to what the last 12 prints were. And I'm only giving you a backtesting of a year. You can backtest for however long you want, but the point is to backtest in similar economic circumstances, okay? So you don't want to be backtesting at a time where good prints meant good things for the market and bad things meant bad prints for the market. Because right now we're in an opposite situation. We're in the bizarro world, right? Where we get weaker employment data, the market goes up. That's not normal, okay? What we usually get, lower unemployment, the market goes up. That's not what's happening at the moment. So there's no point comparing the current economic climate to differing economic climates. There has to be a like-for-like comparison. I want to make that very important point. Now, you're doing three things. You're understanding the new information, you're analyzing that information, and then you're planning for the trade. Now, when the event occurs, and once you have understood the new information, you already know which markets to trade and in which direction, because that was the whole point of the backtesting stage. So you are prepared to enter your trade immediately to capture profits from the expected volatility. For example, you could already know how much the release is surprising if the GDP expectation, now we're using GDP instead of CPI, if the GDP expectation was 2.2 and the actual print comes in at 2.4. If the release is much stronger than expected value, already know the best market to trade and you are ready to execute the trade. Or if the release is anything less than much stronger, so not in that surprise range, but within the expected range, you already know that it would be most prudent to skip the trade. And that's because, like today, when we had that zigzagging, it went up, it went down, it didn't know which direction to go in because it kind of met expectations or was within that range. Okay? Many wise traders have noted that a key to long-term success is avoid forcing trades that are less than ideal. Geez, where was that? Where was that little tip there when I started trading? To know what is the highest print we've gotten in the last year, 4 years, whatever data you're collecting, you get the perspective. And the fact is, you know, let's just say 5 out of 6 times during those 4 years or that year, the S&P moved up following similar releases. That'll support your idea for trading the index. So again, this is really important in the backtesting stage to see, well, you know, based upon the move of the previous CPI print, what do I trade? What remains is to form a plan for how to trade, also known as basically executing the trade. Anything that I can talk about there, Adair?
Yeah, no, I think I had a question and I don't remember.
Go for
the question. Oh yeah, okay, so I guess here, basically, this is, I guess, why it's so key to have it all planned in advance, right? Know what you're trading in an X scenario, because basically when the print comes out, it will move very quickly, right? So you basically have to react the second it comes out, okay?
Bang. Absolutely.
Yeah, that makes sense, because I think especially like with these, I've seen like these 8:30 prints can really move the market. My other question with regards to,
go for it.
You know, what you were saying with regards to collecting data from, you know, a similar or the same economic condition, would it then be, is it kind of similar to EMAs? And I say that meaning where you want more recent data, because that might, the more recent reactions might be more.
Can you explain that again?
I explained that really poorly.
That's fine.
But yeah, so you know how like with, if we're doing like moving averages, for example, with the EMAs, we value those because they put more weight on more recent data, right? So would we, does it make sense for analysis to more heavily weight how things have been reacting more recently? Like let's say the next, like the most recent, like 3-6 prints.
Yes.
I worded that super poorly, but thank you for staying on board there.
I'm going to say yes, and then I'm also going to, you know, throw an exception in there and say possibly no, and here's why.
Okay.
So say, for example, January, February, March, and April all had surprise upprints. So the fact is, we've got at least 4 surprise upprints. Let's just say, come to the 2-shot if you're able to, Chilean Nightmare. Say, for example, that only one has been a surprise downprint. Okay. And then we get a surprise upprint this time. Am I supposed to compare it to the surprise downprint or a surprise upprint? So yes, well, I do agree with you that the most recent economic data is the most important.
But you still need to know what to do.
Exactly.
Okay.
Right?
That makes a lot of sense. Thank you so much.
No problem. So anything that you guys have to ask before I continue, because we're going to talk about where are the opportunity, which markets, like the best market to trade. Put it in the chat before I move on to the next topic. We're going to go through this at least once an hour, so you will have opportunities to ask questions to Adair or I in the upcoming little bit. But yeah, Patrick wants us to use visuals. Yeah, you know what? That's not a bad idea. Maybe I could put it in PowerPoint format so you guys can follow along. Thank you for that, Patrick. I will definitely be looking at that from now on. I think that that's actually a really good idea. But you're going to have to tag me, guys, in the chat. Otherwise, I'm not going to see your comments, okay? Step 4. Where is the best opportunity? Which markets offer the best odds? And so we determined this a little bit in the back testing phase, right? Because we're going and looking to see, based upon the CPI print in October, the CPI print in September, and what those CPI print results were, what the markets did. So by going and doing that research and that homework, we're already able to make correlations between up prints, down prints, and what is moving. What instrument is moving? Is it Bitcoin? What the hell is it? Okay? We need to know that. Now that we understand the release and its implications, the numerical difference between the actual and expected doesn't mean anything until you have relative terms to which to attach it, such as much stronger or a bit weaker. Recall, we determined what a surprise range was and what the expected range was in the data gathering in step 1. Okay? With that context and perspective, the release number will mean something, and we might get an actionable trade. One of the most important things about trading economic events is to choose the right instrument to trade. Surprise, surprise. For example, trading the euro US dollar Forex after a weaker US unemployment rate might be catastrophic given the inconsistency that the euro USD Forex trade has with that kind of event. But by doing research before the event, you can see that trading the S&P, whether the SPY, the ES, or any derivative thereof, would be much simpler in terms of volatility and choosing a reasonable stop loss and profit target, and we're going to get to that in a sec. Okay? For example, by doing the research ahead of time, we know that maybe, let's just say, 9 out of 11 previous situations, the S&P was on an uptrend with a negative unemployment rate. And in normal circumstances, that would be the case. If we got a reduction in unemployment, typically the market would trend up. But what I said to you at the beginning of the show is we are not in a normal economic climate. The likely chances of us trending up on a weaker unemployment rate is very unlikely until things change around. Right now, we're looking for higher unemployment so that the Fed can start cutting, and therefore, if we get higher unemployment, we're likely to move up in the market. This makes a bit of, this current situation a bit of an outlier, but one that we have to deal with because it's the economic climate in which we live. Knowing the correlation between the S&P and unemployment rate is very useful to know before the number is released. This means we can focus on trading the S&P 500 instead of another instrument that was shown to be less consistent in its behavior with that economic number. Anything to add or anything to quote?
Yeah, so there's some questions in here.
Go for it.
That I would like to mention. So I guess one, this might come up now, but basically, Zara in the chat, how to know when to exotic a trade? I'm going to guess that's exit a trade. So I guess with regards to exiting, in these, I guess I would assume that you're having a plan ahead of time, right? Like
yeah, we're going to get to that in the last stage. Yeah, trade execution. No, it's fair. I mean, like, where the hell do I get it? Where's my stop loss? Where do I take profits? Yeah. I mean, this is the actual trade. Yeah. So it's a fantastic question. Any other questions not related to that, though? I was going to say, with regard, I'm just going to hold off all of that then, because I think all of the questions that I had kind of flagged in my brain here are going to have more to do with execution. Okay. But no, I think like the planning aspect makes sense, and I think it's important to have it all planned. Even with regards to execution, right? If you have it all planned, then you kind of know for the most part how you're going to react to the market. Hopefully, if it reacts in X scenario. It should be robotic. It should be mechanical. Like, it should be like, okay, we got a surprise print, higher on CPI, short the S&P. Yeah. You're immediately like looking that thing up, or you got it up already when the CPI print comes. If you have your eye on it, and then we trade. The actual print is what was expected, or 0.1 or 0.2 above. Hands behind, hands down, hands off the keyboard. Yeah. Not trading it because I don't know what to expect. Straight jacket. Yeah, straight jacket. I like that, right? It's very like 90 movies-esque, where like they go in and they put someone in like a white jacket. Yeah, literally. That's how you react if it's like flat or whatever. Right? Yeah. So you should be ready, already know if A happens, I do B. If C happens, I do D. You should be prepped for that. It should not be on a whim or deciding in the moment. That's just how you make mistakes, okay? Last, but certainly not least, is trade execution. Two traders that get the same decision, and that's going to be plenty of people around here. Let's say both buy the S&P. They could end up with different results, and that's just the way this game works. One can end up with very good profit, and the other can end up reaching their stop loss and losing either a significant or a nominal amount of money. But how and why? They both took the same trade. But this moment was just the beginning of the most important part of the game, the actual execution. Many traders just buy and then hope, either getting out on the stop, or if they profit, if they're lucky, that's not enough. That's part of the reason so many traders lose money. A question we have to ask is, what is a reasonable stop loss in this kind of trade? What is a reasonable profit target in this kind of trade? Should we expect 20 ticks on, or 20-point move on the NQ or the ES? Or should we expect 100 ticks? Is it going to be a 0.25% move on the ES or NQ, or is it going to be 1%? How many times have you seen the market going the right way and then reverse, forcing you to choose your trade or close your trade, at break even? By doing your research ahead of time, you can determine what is a reasonable stop loss and what is a reasonable profit target. You can also gauge the expected volatility and the trade duration. So that's a mouthful. Let's talk about actually how to do it. So I've done my back testing in step 2. All right. I saw that in November of this year, when we got a below than expected CPI print, the market catapulted, let's just say, I don't remember what it was, 100 points, okay? And it continued to trend thereafter. So we got the initial algo spike, let's say at 100 points, and then we added another 100 points as the day went by. So I know from this particular instance, that a below than expected surprise print on CPI pushed the market up 200 points on the NQ. I go back and I look at previous months and say they were both below than expected surprises, and they averaged out, let's just say, 150 points, because some were less, some were more, and I take the average of those bad boys. So that I should have my profit taker at a reasonable level within that amount. I'm not saying to go gung-ho and take the top 150 or the top 200. I'm not saying to be super conservative and only take 50 points. You have to be able to make that decision. Now, with respect to the stop loss, what I want to look at to see is, well, when we got the below than expected CPI print in November, did we trend down first or did we absolutely spike up? And if we trended down, how much did we trend down? So I can expect about where my stop loss has to be. So a lot of it is going to be doing previous research. Now, the key thing here is to try to align your previous research with, what I'm trying to say is, try to narrow down your research so that you have situations. You know that in a below than expected CPI print, X happened. Above than expected CPI print, Y happened. And to be able to kind of gauge those levels so that you can have the mean of them and to base it on that. So it's a bit of a trick here because, you know, you may keep your stop loss too tight and end up getting stopped out, or you may be too aggressive with your profit taker and it never gets reached, and then it traces back into your stop at break even. So many different things that can happen here. A lot of it is going to be experience, and a lot of it is going to be research and a little bit of luck. Let's be real about it, right? Don't forget. Ooh, look at that.
Love that.
Okay, Fabian, I see you, baby. I see you. Chilean Nightmare killing it on the ones and twos. Yeah. So any questions with respect to trade execution?
Yeah, I mean, quite a few. I'm going to try to make sure I have them all. Not in like a bad way, just so that I can, you know, kind of get the juices flowing, hopefully for some people in the chat and for myself, from my understanding. I guess, so part of it was kind of off of, I guess, with regards to risk management too, right? What you're saying, I think like it probably depends on your risk appetite, because I know some people are mentioning volatility with regards to these prints. So it would probably be worth it as well, right? Depending on your, I guess, your risk appetite, where you're going to set that stop as well, right? But that would also come with probably research.
Yeah.
And then also from that, sorry, just to jump in here quickly as well.
Well, I got to say something about that. Don't forget the question you're going to ask.
Okay,
So,
I'll look at
but
it.
with respect to risk appetite, remember like how the market doesn't care about your stop loss?
Yeah, I know.
Right? It's got to be based on, you know, like, for example, if I know that 16.4 is a support level, because I've seen it today act as a support level, right? Like, I would want to base it around 100-point levels or technical resistance, whether it was a closing print, a key level that we touched multiple times on the hourly, which I know was a support level. So that's what I'll be looking for there. And it's going to be a subjective analysis, to be fair.
Okay. That makes sense. So basically not just basing it on how you're feeling, but what, because the market doesn't care about your feelings, but what the actual past action in whatever equity or stock or asset you choose based on your past research. Yeah. So then from that, actually, I have a second question that kind of like flows off of that.
Sure.
So with regards to, I'm going to try to find a way to word this. So I know you were mentioning, like, you know, averaging the numbers with regards to your exits and entrances. Would you then still cross-reference that with the actual action that's happening on the charts, though, so you can make sure that whatever your profit takers and your outs and your stops are kind of correlated to the key levels that we were just mentioning on the assets?
I don't really understand.
Okay, sorry.
I'm going
to try it again.
Sure.
So basically, you know, I were mentioning, like, with regards to like averaging out what the actual move was, and then using, you know, that amount of movement to kind of plot. Would you do that then in tandem with the charts and seeing what levels have been, as you were kind of mentioning, like key levels for your outs?
I would do that anyway. So if I
don't know how to ask that very well.
So what? Let me answer it the way I think you asked it, which is, if I know that an expected surprise upprint is more likely to push the NASDAQ down, and a surprise down print is more likely to push the ES more aggressively up. I'm not saying that's the case. I'm just giving you any random examples. Then right away, I should be charting levels on both those bad boys. I need to know where the support levels are, the major support levels, the major resistance levels. I need to be cognizant of them because I'm planning around them, right? Right. So I'm saying to myself, if X happens, then I take Y action. Well, I need to be prepared to take the trade on Y by having all my key levels set up. And this is something that I really don't think is something that we need to do in the morning of. A lot of this stuff can be done prior, right? Yeah. We know what the expected print or the expected print for the CPI is way ahead of time. We know what it's done the past 12 months. Nothing of that is new. So everything is ready for us there to analyze, right? And so that's what I would say to that.
Thank you for answering that question. Absolutely. I apologize for the wording of that.
No, it's fine. I mean, we're all learning here, right?
Yeah, so thank you.
That's basically it, guys. So what you're trying to do here is you're trying to avoid surprises, and you're trying to see how the market has reacted previously within a certain given certain data. So if it was an up print, it did Y. If it was down print, it did Y. If it was a very aggressive up print, it did Y. If it was a very aggressive down print, it did X. You guys get what I'm saying? But a lot of that is going to have to do with data collection and backtesting. So hope that helps. It's something that you can repeat for multiple different events. Now, I should also tell you that the market cares more about certain economic indicators more at different times than in others. What do I mean by that? Right now, CPI, very important, or, one of the most important, maybe jobs as important as CPI. GDP really hasn't factored so much this year or last year. In fact, it was been like, okay, well, there was a point last year when we would get lower than expected GDP prints, the market would move up because we were looking for lower than expected GDP prints so the Fed could stop raising rates or start cutting. That isn't normally the case. Once we get into normal economic conditions, positive GDP prints will be, number one, more important than CPI when inflation is an issue, and number two, when we get a positive GDP print, the market will trend up. So it's very important to understand the context in which we're trading. Otherwise, you don't really know what the hell's going on, and you shouldn't be trading, quite frankly, okay? This type of event. Trade whatever you want, but this type of event, more nuanced and more contextual. So I just want to make that very, very clear. None of something. Sharif, you are a great teacher. This was an excellent explaining to Adara's question. Oh, thank you. I suck as a teacher, but Adara had a fantastic question, which helped me a little bit.
Yeah, well, thank you for answering the question. And I apologize for sometimes the roundabout wording of things, but I really appreciate you taking the time to go through that with me. Oh, thank you. I appreciate you as well.
All right. Blackberry, Sharif, Adara, I think to trade these events, it is also quite sinful. To watch the market before the event because I saw the market anticipate a possible outcome. What causes volatility? Well, here's the thing. Right in anticipation of this event, the algos are going nuts. It's typically not humans, and you can usually see when the humans are involved. Volume tends to be a little bit higher, and volume lately, when you do a comparison on the index, volume's a little bit lower. So participation is still a little bit suspect. But you shouldn't really be scared off by what happens before. You got to understand, people are trying to position themselves in the best possible way. These are very complicated. Investors, traders, whatever. Stick to your guns, stick to your plan. Don't worry too much about what the anticipation, the 5 minutes, the 30 seconds prior to that 8:30 print is doing. Try to focus on what you can control. You're looking for the actual print, and you're trying to determine if it's within the range or it's a surprise print, okay? That's really what you're going for here. And stick to your guns and stick to your levels.
Yeah.
All right, baby.
Yeah, I'm seeing a question here from Pavel Elvap. I'm so sorry if I said that wrong. Also, I love that it's they're both anagrams of each other there. But wouldn't it be better to wait for the initial market reaction to know the implied move? A lot of CPI days have crazy initial moves and then reverse. My response to that, and please correct me if I'm wrong, would be I think that's why you kind of have your stops and your out set, right? Because then you know if it goes against you, you can run for the hills. So that would be my response to that. I don't know if that's
because you never know what's going to happen. I mean, you plan everything goes the way that you expected, and all of a sudden we start trending down. There's nothing you can do about that. You're going to have to take the L. But in most times, especially if you've done your research in the past and you've seen that the X result produces Y movement, then you can feel a little bit confident in that. But nothing is a sure thing. Nothing is guaranteed, especially in trading. So I don't want you to ever think that that's what I'm trying to say. Obviously, we're trying to put the odds in our favor, so to speak, here. Okay. Chenga Sherpa, Sharif, any thoughts on a stock scanner? Yeah, I use a stock scanner every day, my friend, for small cap gappers mostly. I use my watch list for the regular stuff, for the big equity names, and I categorize them by sector. I have a very, very thorough watch list that I go through every morning to see what's moving. But also, another very important thing, especially if you want to trade active stocks, is having a very good news screener. One of the ways is to subscribe to this lady's watch list every morning. She gets in here bright and early to put that together for you, and she has some of the best software tools up at that big desk to help her put that together. And so she's going to let you know what's moving. If you haven't already, make sure to subscribe to our watch list. Fabian, do we have the watch list animation up there? I know it's on Brendo's desk, but I thought maybe you had it. But make sure to subscribe to our watch. I believe it's watchlist.tradertv.live. Every day you'll get it in your inbox. You'll know what got upgraded and downgraded. Any news catalysts and stuff. That helps you put.
And Will Papa will be talking. I don't know if he is. We'll put that on the watch list. If there's Fed speakers, if there's economic events. I kind of try to go through the market and then push out what's moving the most or what maybe be the most of note there. So yeah. Thank you for the shout out to the watch list.
Absolutely. Thank you for the kind work, Steve, Sharif, Gabriel. You are a great, patient human. Those are both incorrect statements. But thank you.
You are very patient with me, and I would say you are a great human.
Thank you.
I would agree with Steve.
Thank you, Steve, for the kind words, my man. But what I'm keeping my eye on right now, because we're going to digress a little bit from the material, is the NQ. And I'm very disappointed with myself in how I didn't trade the NQ this morning, especially off that amazing 16.4 level. Let's talk a little bit about that right now. You saw what happened. We got a CPI print that was in line with expectations. Fabian? And we popped up aggressively there, and then we trended back down. So this is what I mean by, and we're right back kind of where we started. This is what I mean by economic events that come in line with expectations or just a smidge above or below typically end up doing something like this. They are hard to trade. So off the CPI print, I would have been hands on my side. I would not have been taking the trade based upon what we talked about today. Where I would be, where I missed the trade and where I should have been looking is at the 100-point levels. You guys know how much I respect these 100-point levels as support and resistance, in addition to the closing print from the day prior as also support and resistance, okay? And this white line, this horizontal line over there, that's yesterday's closing print. And we initially got support at that level. Surprise, surprise. And then once we broke down that level, look where we found the next level of support, 16.4. In fact, we only went down to 16.396.5. So essentially holding 16.4, and it was a V-shaped recovery right back up. Now we're at another 100-point level. We're at 16.5. And you know how I love to watch how we trade at the 100-point levels to see who's winning. Is it buyers or sellers at that level? And the way that I determine that, or I think that I'm trying to determine that, is to see how it trades. Where are the closing prints taking place? Are we making higher highs? So for example, we're at 16.5. Yeah, we got up all the way to 16.517, tanked right back down, but in general, we're holding that 16.5 level. We're also putting in higher lows on each successive 5-minute candle, meaning to me that incrementally, slowly but surely, buyers are overwhelming sellers at that particular level. Now, it's not a hard and fast thing. Sometimes it takes 20 minutes to develop. Sometimes it takes half an hour to develop. And sometimes it happens in 2 or 3 5-minute candles, so 10 or 15 minutes. There's really no hard and fast rule. But I'm watching what we do here at 16.5 to see if we decisively take it or we break down below it. And then I'm going to be interested in getting into a shorter long. Obviously, if we get into a long, I'm looking at 16.550 as a resistance level. just based upon where the wick is and the fact that it's the 50-point level. If we break down and we trend below 16.5, the first area I'm looking at is a VWAP, which is at 16.4 and 2/3, and then below that, I'm looking at 16.450, and not just because it's the 50-point level, but is because it's yesterday's closing print. So we're going to have to wait and see what develops here, but I feel like we haven't chosen one direction or another, with possibly maybe just a slight edge to the long because of these higher lows. So that's what trade I'm interested at the moment on the future. Not the future, but what the trade that I'm looking for is on the future, on the NQ. We'll have to wait and see what happens here.
Yeah, that's a good look.
Yeah.
Yeah, I am currently, I got in, I'm just seeing Hogwriter here too, NVIDIA forming a wedge, question mark. I got in NVIDIA with admittedly a teeny tiny amount of shares also, you know, I'm on the sim, but I kind of noticed what looks like it could be a pennant type situation.
It is, yeah.
And so I wanted to enter, thank you, yeah, I saw like a bull pennant. We had this beautiful flagpole here. Now we're kind of doing the little compressing thing. So yeah, I think I got in at 471.30 because that was where we had a little bit of support. If we fall below, like AKA out of the pennant shape, so I think below decidedly this 470.50 area, I am outie. I am saying bye-bye. But if we don't,
Bye-bye.
I am into this trade. And then also, because, you know, I don't usually like DCAing, but I mean, if you plan it out, I think it makes sense. However, if we break above this 472.5 decisively, especially because I have an itty bitty amount of shares, then I would probably add, like, you know, a teeny tiny amount here, just because that would be a further break to the high side, right? So I'm trying to plan it all out. We'll see how it goes.
I like it.
Thank you. Planning, and I feel like I learned as well, too, with regards to dollar cost averaging, because I think when I first started, I would just kind of add if I was like, oh, this thing is, you know, still not actively going against me. No, I think, as you said, like, if they're planned, I think it makes more sense, because then you're not just adding to a position that might go against you, right? You've actually, you know, thought it out, you've put time into it, so I really appreciate, you know, that we got to go over that. There's quite a few conversations as well in the chat with regards to dollar cost averaging, but yeah, no, to answer your question, Hogwriter, or I guess to address your statement, because it wasn't really a question, I would say a bit of a bull pennant type situation that I will hopefully take advantage of.
So can you explain to Hogwriter why you don't feel that that is a wedge?
Well, so yeah, okay, yeah, of course.
Yeah.
So with a wedge, generally, it's either, well, okay, we're in the up, we're already up on the day in NVIDIA, so it would be an ascending wedge, because that's how the wedges work. But so for it to be, because I was also watching NVIDIA just thinking it might be an ascending wedge, because I've been watching this one kind of all day, as I do. These tops would have to be a flat top with slightly higher lows.
Bang.
So we have a higher low, but we do not have a flat top, I would say, at all, because this top is lower. So then that's what I started to notice, the wedge, and I was like, oh, this could be, you know, a wedge to keep an eye on, a compression wedge. But then I noticed this big old flagpole over here, and I was like, oh, actually, this looks like a bull pennant, right?
Bang.
So like I would say, and this is the thing I'm learning as well, because I initially was like, oh, I see something that looks like a pattern wherever, and immediately want to jump on that, right? You have to think about, where has the trend been in this stock before this point? Like what's the preceding action? Because that does play a role in terms of what pattern is forming on the stock.
Bang.
So yeah, that's why I would call this a bull pennant on our good pal NVIDIA, because we did have, and then also unlike a flag, because flags kind of have that rectangular movement, this is more, we have that compression. It's a little
Compression,
triangle.
exactly.
Yeah. So there we go. Thank you. Also,
Day
NVIDIA's
Trading Singh says, good statement here. I want to read it out. I'm keeping my eye on the future, though, because it looks like we are going to reject. Come on, I'm a little late. Looks like we are going to reject 16.5. We're going to try our hand on the short here. Okay. Day Trading saying, Sharif, I was proud of myself to steer well clear of the announcement such as CPI. My advice after 3+ years, steer clear of ER and CPI numbers. I don't know what earnings. I mean, I think you mean earnings. ER and CPI numbers, don't gamble. Fair. You know, we're just trying to, you know, explain to you a system here that kind of helps put the odds in your favor. But if that is not a trade you are comfortable with, absolutely steer clear of it. Couldn't agree with more, my friend. Let's move up the chat here and see what other questions are. I didn't have an opportunity to look yet. Patience to the Moon says, Merkmez. Yes, I do agree. Yeah, without Without patience, it's a tough game to trade.
Yeah.
All right, so I don't see any questions here. I think Thomas Johnson asks, Adara, what needs to happen with bonds to move the market in either direction? Is it based on interest rates? Do you want to take that, or would you like to answer
I
that?
will admit, I will say my caveat here is I need to learn more about the bond market. I will say though, it seems like late, and you know, we were having this conversation earlier today because someone was asking you, like, you know, what bond was that and which ones moved the market?
Right.
And you were kind of saying lately, especially because as we were saying, you know, even with regards to what we're talking about today, economic events, the market will react to different things differently in different like periods. Do you know what I mean? So there was, as you were kind of saying lately, there's been a stronger reaction to the bond market, right? So to answer your question, I would say it generally just kind of seems to be reacting like period. I do not. I think it's something I'd like to learn more about. Yeah, not much of an answer.
So
sorry.
a couple of things here, guys. Firstly, when usually equities and yields for bonds move inversely. It's not a hard and fast rule. Sometimes they move together. That is the exception, not the rule. The rule is when equities go up, yields go down. And when yields go up, equities go down. Not a hard and fast rule, but one that you'll be able to observe as you keep your eye on the market. That's number one. Number two, when we have a bond auction, okay, when we have a bond auction like the one we had yesterday, the 10-year, one of the most important yields in my book, one of the most important treasury durations to keep an eye on. If we have, okay, so yesterday, what do we have? We had the previous print for the 10-year was higher than what the yield was yesterday. Typically is the more demand that there is for that particular treasury, the lower the yield will be. The less demand that there is for that particular treasury, the higher the yield will be because you have to entice people into buying that treasury. It's one of the biggest ways the U.S. government uses to raise funds, obviously in addition to taxation, is by the issuing of debt. And a treasury is a form of government debt that they promise to pay back. And in the interim, they're going to give you an interest rate, the yield. That's your, you know, okay, I'm going to have to wet my beak here on an out. Oh, baby. Nice move down on the futures, but we're looking for, just to digress.
Nice short. Yeah.
Just to digress quickly, I'm looking at the first level of resistance on this short at 14, 6 2/3. That is VWAP. I want to see how this short on the NQ coalesces with VWAP. Does it respect it? Does it blow right through it? So the first thing, 16, 4 2/3. I'm looking here on my chart where VWAP is, okay? Now, going back to what I was saying is, what the hell was I saying?
You were talking about bonds.
Yes.
Yeah.
I'm stonks. Obi says I was talking about stonks. Yes, I was talking. Well, in this case, actually, I wasn't talking about stonks, Obi. I was talking about bonds, but close enough. Typically, when you have a higher than expected, you have to entice people, obviously, in order to buy your bond. So when you have a weak demand for that particular bond, you're going to have a higher yield. Now, yesterday, I was doing a little bit of reading about what the 10-year did, and it looks as if, you know, by comparison standards, not by the previous print standards, but by comparison standards, and by comparison, I'm talking about historical 1 year, 2 years, it was a very low turnout, very low demand for that bond. But print over print, meaning comparing it to the last 10-year, we had more demand. That doesn't mean historically it's good. And one of the other things to also keep your eye closely on is who's buying these treasuries. You want to keep particular eye on international foreign investors. I'm talking specifically about the Chinese, the Japanese, and the Saudis. They are some of the biggest buyers of U.S. government debt. And if they're not interested, that is a signal for me, okay? Because typically there's not anybody else that's going to step in and take their spot. That's not a hard and fast rule, but it's been one that you can live by for a little bit. So what I'm looking for is historical demand versus the historical average on these bonds. And number two, what was the current print for interest versus the previous print that I'll show you one-to-one comparison, and then who's buying these. So that's another thing that I keep my eye on there. So I hope that helps, and I hope that you can somehow use that information to make money.
Yeah.
Anything that you want to talk about?
Yeah, so I'm actually watching Amazon right now, shout out to Obi, because I have it on my side chart and I'm seeing, I don't know for sure if this is gonna be like a flat top break, but look at this 146.70 area, 146.60 area kind of top, right? And then we go on the daily also, because I know yesterday, Neil, I really appreciated, was kind of talking about Eli Lilly yesterday on the afternoon show, and also my trade in Eli Lilly, and how, you know, sometimes levels will just appear in a stock. Look at Amazon and this high 146 level. This is on the daily. This thing is stuck to this level like glue. So I'm just going to keep an eye on what we do here. I'm not going to jump in, you know, too hastily, but if we break this flat top-ish area and this seemingly very intense area of resistance, I could be intrigued. I could be enticed. Also, thank you, Jordan Stanley, complimenting my makeup, much appreciated there. Also, I did get out of NVIDIA because, you know, as we said, sometimes patterns do not manifest the way you think they're going to, and that's why risk management principles exist. So I got out a little less than $1 out here, but like I said, we took like a teeny tiny amount of share sizes. So there, why Sharif our ear?
Yeah, I know. Sorry, it's the straw. The Chilean nightmare is very disappointed with me. I'm sorry, baby. And,
yeah, but yeah, no. So yeah, we broke out of the wedge. So I departed from NVIDIA. But we'll see what we do at VWAP here. If we break a new lower low, we'll see what occurs. But yeah, I just wanted to look at Amazon there. You started stealing Obi's thunder there, but it was doing things I was interested in. Yeah.
Obi, yeah, Obi-Wan Kenobi. Obi, you in anything right now that people want to know? They're gonna have to wait to 2 o'clock. You're gonna make them. That's not very magnanimous of you, Obi.
Woo! You love doing magnanimous out there.
You don't want to be the people's trader. Obi doesn't want to share with you guys what he's trading. Maybe tell him how you feel about that on the afternoon show. He says to watch at 2 if you want to know what the Kenobi one is trading. I'm sure it has something to do with Amazon or Uber. No, I'm wrong. Can't always get it right.
Wow.
Oh, the Neil's going to let us know. He's cheating, he said. He's looking at Obi's screen. All right, guys. Yeah. The chat is hilarious.
Yeah, people are like praising Obi here.
Come on, Obi. They all want to know, baby. All right, guys. Anything that you have to ask us? I think we could probably start with the second read around. It's 12 o'clock.
Yeah. If anyone has any questions, like, you know, slide them in there. We enjoy questions. That is what we do here. But yeah, so for now, we shall go over, rewind, flip it and reverse it. Shout out to Missy Elliott. How to trade economic events. So basically, step 1, numero uno, gather the basic data. So basically, what kind of data are we talking about? There are 4 pieces of data, as Sharif so carefully laid out there, much appreciated. Previous release. So that's the actual number from the previous economic release. So for example, let's say we're going to use CPI again as an example because that came earlier today. So I would look at, like, you know, last CPI, so the October, because we just got November's, I would be looking at October's CPI release. What was our actual number? Now I'm going to look at the expected results. So it's number 2, my second piece of data. So what are we expecting for today's for CPI? And so basically just use this as a benchmark for the actual release. Like it's not really going to factor into the actual trading as much as it will give you a sense of what we're expecting, so we know if what we're getting is super, you know, how it compares to the expected number here. So then we want the range of the releases over time. So you're looking for a break in the pattern, right? So you need to know the range so that you understand once the release appears, if it's within this range or if it's an unexpected higher or lower. So that leads us to number 4, the surprise range. So that is basically stronger or weaker releases relative to the expectation. So using the surprise range from like the past, let's say 10 months for CPI data, you can see that a negative surprise is more likely than a positive surprise, maybe. Or just an example here, right? And this, yeah, please do.
Because determining what is an acceptable range and what's a surprise range, how do you do that? By historical analysis, right? You're looking to see, okay, in March of 2023, we had a CPI print 0.1% above the expected. What did the market do?
Okay.
Oh, it didn't do anything. It did bupkis. Oh, but hold on. In November of 2023, we got a below expected range by X amount, by 0.3. So I can guesstimate that a 0.3 a negative print or below expectations would fall within the surprise range.
Okay.
Based upon what the market did. So we need to do the back testing, the historical data analysis to kind of figure out how which one that fits into.
Yeah, thank you. And you can't do the back testing without having that gathering of the data. So it's like it's a two-way street, right? You really need that intersection there, that confluence between the data that you're collecting and the back testing that you're doing, because you can't like do the back test if you don't know what you're testing with, right? And that's why the gathering of the data is important. So let's call
gather
it
that
PERS.
data, baby.
Previous release, expected results, range, and surprise range. PERS. That's our acronym we're gonna have here. Those are the 4 pieces of data. I'm an acronym person. I find it easy to remember stuff. So that's the acronym you need to remember. Previous, expected, range, surprise range. So now that you have this data, you will move on to step 2, which, as Sharif was just mentioning there, simulation or backtesting.
Yes, ma'am.
But so yeah, now that you understand the landscape in which we are trading, I love that word here. We're understanding the wild landscape of, for example, CPI prints. Now that you know this, you can potentially prepare to trade the release in the wild.
Hey.
So yeah, you cannot know the future. Like that's what we're talking about with everything we're talking about. It's more just kind of gauging what could happen based on past data. So all you have is this historical information, so you need to find a way to use it to your advantage. And that's where the data collection comes in tandem with what we've got going on here with backtesting or simulation, looking at the data. So basically, if you backtest before the release, you can kind of learn what instrument will react the most strongly, the most in a way that you can actually trade it and play with it here. Because we prefer to trade the instrument with the highest correlation to the event, because otherwise you're just trading something that will be kind of flat. You know what I mean? That it's not going to be a very fun trade. So you can explore the market logic for the specific event by using backtesting or manual research. So you don't know if the results are going to be negative, positive, or as expected. So why not prepare for all of them? Prepare for every possible incident, every possible reaction, and then you can see which assets are reacting in a way that's the most interesting to you, which assets are giving you the most to work with, the most to get some juice out of for a trade.
Dump it.
So basically by using the strategies and seeing how we'll react to a negative print, neutral print, a positive print, then you can have an idea of how to capitalize on each situation and then trade calmly and efficiently rather than having a scared little breakdown at the result. And so if you backtest, like for example, let's see that by backtesting and doing the research, you can see that among all the data for the past, for example, 3 years, out of 36 releases, only 12 are actually stronger. So then you can kind of use that example to be like, oh, what asset was reacting in this scenario? This is the most likely scenario. This is the asset that has been actually, having the best reaction, right?
I just need to pause you for a second because we have a really good question from Ivan. Do you think good employment is good for the market since Fed will probably leave rates high if employment is good? Again, I've mentioned this number of times on the top of the show. Maybe you weren't here. I want to mention it again. You need to know the context in which you're trading. Right now, we are in an economic climate where, for the most part, if you get what we perceive to be good economic indicators, such as strong GDP, a strong jobs number, a healthy rate of inflation, these will be looked at negatively by the market. That is not the normal circumstance. In general, when we are outside this, economic climate of high inflation and worried about the Fed not cutting until later, we're going to construe good economic indicators as bad. This is the exception, not the rule, but you have to trade in the context in which we are, okay? So, strong jobs numbers will likely, strong job additions and a low unemployment rate will likely make the market go down. High non-farm payrolls, a good above expectations, will probably make the market go down. Strong GDP, although GDP is a bit tricky because we're looking for a soft landing, so I don't want to make a clear declaration on that. But for the most part, the last 2 years, if we got strong GDP, the market would typically go down. Why? Because it shows that the economic climate is strong and that the Fed is unlikely to cut yet until it sees some slack in the economy. So you have to understand where we are to understand what that particular economic indicator means, okay? Just wanted to make that very clear.
Yeah, no, thank you. I appreciate that. And then also, Geese, yeah, basically just using the back testing. Sorry, I just was not speaking English there for a second. Using the back testing, now that you've gathered the data to actually see how certain assets could react to this data so that you can make the smartest decisions so that, if you stay ready, you don't have to get ready, right? So that you're already prepared for the situation. So now what happens after the release? So presumably by this point, as Sharif mentioned earlier, you've prepared everything, right? Like this is not something you really want to prepare the morning of. That's a lot of data to go through. That's a lot of back testing to do. And you know what I mean? This data comes out like, a month in advance. There's usually, for most of these pieces of economic data, you get one per month, right? So presumably you have prepared, you've woken up bright and early before 8:30, combed your hair, ready to go. And so now once the news is released, you are in a position where you have to act. And that's where the prep comes in. So the markets immediately start moving faster, like running like little mice. They become more volatile, and sometimes they move without logic. But you know what happens when the market does not have logic? You have logic.
I just wanted to interrupt.
Sorry, please do.
Quickly, guys, for anybody following around the futures trade here, we've taken several prints. Now we are at VWAP. So a very critical level. Does VWAP act as support here? Not going to make a determination one way or another, but watching it very closely as the NQ rejects 16.5 and comes back into 16.4 and 2/3. Will VWAP act as support? Be cognizant of this if you're trading the Qs, the SPYs, whatever. We're at that level right now, so we're waiting to see how VWAP acts. If it doesn't act as support, my next level is going to be yesterday's closing print, which is 16,450-ish area. Sorry to interrupt.
No, it's okay. I think another beak just got wet.
Yeah. We're in a print factory right now.
Oh, that's beautiful. Yeah. Congratulations. But yeah, so and the way that the futures trade work is because you planned it in advance, and that's the same thing we have to do to transition back to the CPI situation, right? So in order to trade in these situations, you have to do three things all at once. So you have to understand the new information and then analyze that information and then plan for your trade. Now, this is a lot to happen in a very volatile situation, especially when you just get a print and the market's moving like crazy. But that's why you've done your planning in advance. You know what asset reacts in a certain way to a certain print. So let's say, this is, just an example here. Let's say NVIDIA usually will trade for example, lower if we get, this is a bad example. I'll just say let's say the ES, we'll use, let's say the ES generally trades lower if we get a really high CPI print, right? Or something like that. And so then that if we get a really high CPI print, then maybe you've planned to short the ES, right? So that you kind of have your plan, and then you have to analyze that information quickly, see which assets or which indices that corresponds with, and then plan, what I mean. And that's where also planning levels in advance is pretty helpful as well, like Sharif was saying, kind of knowing what levels are in play should X scenario happen, and the likelihood of that scenario happening because you planned it in advance, right? And so that's where you really need to put your plan into action there. So once the event occurs, and once you understand the new information, you already know what you're trying to trade and in what direction because you planned it out. You did the homework. So then you're prepared to enter your trade immediately, and that's how you can capture a profit from the expected volatility. So basically, instead of being afraid of the volatility, you're kind of embracing it because you've prepared. You know what you're doing, right? So the volatility is just kind of helping you maybe make the most of that trade would be what I would say to that. So, for example, you could already know how much the release is surprising if, for example, if the GDP expectation is 2.2%, the actual value is 2.8%. So that would be a surprise to the upside. So then but you've already know the best market to trade because let's say the night before, you're doing simulations. You were seeing which assets are responding, the strongest, which assets are giving me the most to work with. Should we get a really high GDP print based on what's happened in the past? So, please do.
Well, you don't say please do. I didn't mean to interrupt, but
it's okay.
I heard you talking about this, and just to jump in here because this is a sort of an important point I want to make. Execution, and you guys are going to talk about execution, but planning your trade, knowing where you're going to execute. Understand that on an economic release, the fundamentals of what happened is you're going to get a liquidity drain before any number comes out. It doesn't matter what economic number it is. The liquidity before and after is going to be very different. So when you trade whatever instrument it might be, have an idea of what the low liquidity environment looks like. So I'll give you two examples. One, a lot of traders on this floor on a Fed day wouldn't trade the NASDAQ or the ES. They would actually trade GDX, but they weren't GDX traders So what they had to do in the week in advance is observe GDX around the open, around the close, around other economic numbers, so they had an idea of what the liquidity looked like, so they would know what slippage would be. And the other example would be oil futures. I mean, we had traders that were trading oil futures when the oil number would come out. And so, again, you want to know what the liquidity is going to be on that type of instrument if you're trading something new. But the cautionary tale, I would say, is risk to reward is not always about, oh, I want to enter at this price if this thing happens on the number. The worst thing that can happen to you is getting a bad trigger in on an economic number and entering before it's actually released, or simply not realizing how much liquidity there is going to be around that price. That's why I talked about that first. Now, I can tell you that it happened on this floor. I probably told the story of the one time that I got a call from head office. We were the head office trading floor, and I was sitting on the risk management desk trading myself, and the oil number hit at 10:30, and I want to say at about 10:30 and 20 to 30 seconds, maybe it was a full minute, it didn't feel like it was very long, the phone rings. It was an actual phone on the desk, and I pick it up, and it was what the F just happened. And it was essentially both things were a problem. The amount of liquidity that was there in the oil futures after, and getting an early trigger. Someone had triggered in before the number came in because volume came in before the economic release. Have a plan of action for that. What are you going to do if you see something like, if you have using stop orders to get in? What happens if you get triggered at a bad price? What if it goes to your entry price seconds before the number is out? Did you have an order there or not? Understand that these things can happen. It's the kind of mistake where if you're exiting at an extreme price and that lack of liquidity, it can be horrible, especially if it's in the pre-market. So be very, very careful trading around those economic releases. Know the instrument you're trading. It's not just looking at the chart of it. If you're going to trade the ES and you're not an ES trader, know what the liquidity looks like when it starts to move around. If you're going to trade GDX, know what that looks like when it starts to move around. Regular liquidity, when you look at that level 2, is not going to be the same around a major release. You've got to know what your worst case scenario is for slippage and what you're going to do if you happen to get triggered early or if you miss. Have a plan of action for everything, not just the normal scenario. So I'm throwing that one out there, and one of these days I'll tell that story more in depth because, you know, there's a couple of traders that got hit on that oil futures thing. And I will tell you the single happiest and best story in my entire trading career was when the one guy who took the biggest hit clawed out of that hole. It was a hole that everybody thought was going to end this trader's career on a fat finger on the oil number at 10:30. And he climbed out of that hole, and it's the most epic thing I've ever. Hey, just to spoil it for you.
Is that the guy that had the kid?
This is the guy who climbed out of the final stage of that hole the day his first child was born.
Yeah, I remember this story.
And I can tell you this, one of these days, maybe on the podcast this week, I'll get into it in a full thing. It is the single happiest trading moment of my life. The entire floor was losing their absolute ish when it happened because he left the hospital to come and trade in the afternoon. He didn't even know what his son's weight was. He knew his son was born and healthy, and he's like, I got to go back and trade this close. He clawed out of the hole on that final hour of the day. It was amazing. I'm not going to say his name. He still trades. He has his own trading floor right now. But it was a great story. That said, he could have avoided all of that if not for that bad trigger on an economic release. Less liquidity than expected, no plan of action if volume came in slightly before the number came out. So anyways, I didn't mean to interrupt by that long. I'm gonna go back to my salad here. So I didn't do the what's for lunch thing, by the way. It's like, I don't know, like I got this chicken salad. You guys can see this? So I got this chicken salad in my salad, which is kind of weird. But everybody else, and everybody else meaning everyone else on the floor, they got apple and brie stuffed chicken, which sounds pretty nice, with steamed basmati rice and herb roasted mushrooms. So I haven't had it. That sounds delicious. As I said, I get the salad here with the chicken salad on top of it. But if you guess chicken, you're right for the umpteenth time.
I think that was some of the best advice I've heard.
Thank you so much for sharing
this
that
week.
story. Yeah, like do not mind interrupting because I feel like I learned a lot from that. I think it was a really powerful story. Yeah.
And Neil did tell me that story before, and that's why I knew immediately to ask him, was it the dude who had a kid? And because this story was tattooed in my mind, because when I first started working here and we went to the Blue Jays game, he told me the story, so I've never forgot it. Quickly, guys, with respect to the futures trade, you can see that we bounced off exactly VWAP. Surprise, surprise. Fabian, if we're able to come to the chart just for a quick sec. That is VWAP, and that's where we bounced. So we did get one green 5-minute candle. Let's see how aggressively we retrace up, or is this sort of, as Neil would call, a dead cat bounce, and then we continue to make lows. So not going to really judge. Let the price action judge for you. We already got the entry. We got 4 exits. Where do we have? We have 5 exits so far. If it comes in to my entry price, that's going to be the end of the trade. Somebody was asking there in the chat. But yeah, that's the look on the future. Sorry to interrupt you, Derek. Go for it.
I'm just going to say once again, I love how you set the beak wetters on these areas that we do have, significant points. Areas that we,
It's all good. Yeah.
Areas that we are kind of seeing, like resistance, right? So yeah, for example, there we had like a lot of, build up. That was clearly a level. I think it's really cool. I'm just going to gush over that because I think it's a really good example of showing the plans actually working in action. And that wouldn't happen if you hadn't planned it in advance.
No.
So there we go.
I love those 100-point levels. Last point, yeah.
Yeah. So yeah, thank you so much, and thank you for letting me kind of gush over that, because I think it's a good example of how what we're actually learning is relevant. Also, that apple and brie chicken sounds amazing, and hopefully I can snag some of that, because I was just thinking about, I like apple, I like brie, I like chicken.
Oh, here we go.
But that is irrelevant. What is relevant though? Do you have a future update?
I'm just gonna hit flatten right at my entry, so I already told people that. Yeah.
So there he goes. Yeah. But yeah, so basically we were kind of talking about how once you get the release and everyone's freaking out, you just have to understand the new information, analyze it in light of the plan that you have set out, and plan for that trade. There we go. So we were talking about that example. If you have like a GDP print, if you know it's going to be, if it comes out stronger, you already have planned for what assets make the most sense to trade. If you have, or which assets react the most strongly, I should say, if you do have that strong GDP print, right? So many wise traders have noted that a key to long-term, I'm going to do the old man finger again, the key to long-term success is to avoid forcing trades that are less than ideal. And that's like what I was saying with regards to, I was asking Sharif, so like if you get a flat CPI print and the market's not doing anything, then you would just not trade.
Yo, how stupid is this computer?
Yeah, the computer deserves the old man finger wag, so I'm going to finger wag at the computer there. But yeah, so basically to know that if you know you have like an exceptionally high print, for example, then you can kind of get perspective, and you wouldn't necessarily know the significance of the print had you not done all your research ahead of time, right? So that is the importance, change the tense there, of the research. And so then now that you actually kind of know the significance in action, you can kind of think about how significant it will be in action. Now you have to plan for how to trade, and that's how you execute the trade. Where is the opportunity? Which markets offer the best odds? Well, yeah, you're not going to know that unless you plan in advance, right? As what we were talking about here. But yeah, so now once you understand the release and its implications, because you've looked at that past data, then you kind of need to look at the numerical difference between actual and expected, because that's not actually going to mean anything unless you have relative terms attached to it, right? So that's like, much stronger or a bit weaker. Well, how will you know that? Analysis. So with the context of the past movement and what actually constitutes the range, and that's why I appreciate Sharif, kind of mentioning earlier when I was talking about this, the reason the range matters is because it actually gives you like context for how something will move, right? Because if I could be like, oh, this number came in at that, but that doesn't mean anything if I don't know what it normally does and what it's done in relation to its expected release, or its expected number there, the expectation. But yeah, so one of the most important things about trading economic events is choosing the right instrument to trade. So for example, if you're trading the euro to USD after a weaker US unemployment rate, that could actually be catastrophic, because you can go back and see actually, the euro USD relationship following that kind of event has kind of been inconsistent. You don't have an actual, past to be like, oh, every time we get a lower than expected USD unemployment, the euro goes up. Like, you know what I mean? If you don't have that, if you're like, oh, it's kind of wiffle-waffly, then maybe that's not the one you want to trade. right? So that's just an example. And if you do research,
so if I could just make a little elaborate on that part. So what, guys, when you, where are you at right now?
Like
Trade execution,
midway.
or you're on best market to trade? Okay.
Step four.
Yeah, so when we do the back testing, part of the analysis that we're doing is we're looking at different instruments. Okay, so I go back 1 year and I look at the CPI prints, okay? Well, what the hell am I looking at the CPI prints at? I'm looking at the actual versus the forecast. So that's number one data point. Number two, I'm looking to see how the market reacted to those releases, okay? And I'm noting if the CPI came in markedly below expectations or markedly high, how did the market react? By virtue of that step, I must be looking at something. Typically, what you're looking at is the S&P, the NASDAQ, whatever you want, the Russell, the Dow. You could also do Forex, and that's what Dara was talking about. She looked at how the USD reacted to unemployment results. So the point here is, when you're doing your back testing, looking at the different CPI prints throughout the year, let's just say you looked at 12 months, you should be also noting at that time how the market is reacting. And you're taking note specifically of differences between different markets. How did the NQ react in that scenario when we had a below than expected CPI print? How did the ES act? And the reason that's important is because some of the components in the NASDAQ that are more heavily weighted are more interest rate sensitive. We know the Mag 7 for a fact are interest rate sensitive, whereas the S&P has a more, full picture of the market. It has 500 different companies from all sectors, and each one obviously is weighted a little bit differently than is the case in the NQ. So the point is here to make note of how the different markets react to a particular outcome with respect to CPI, with respect to GDP, with respect to unemployment, non-farm payrolls, whatever the economic data point is, and whatever the market is, you must be making note of that in the backtesting stage. That's how you know what to trade later when you get to trade execution.
Yeah, thank you for saying that. And I think also, too, it's maybe important to note, and that's why you look back in the past, because different assets might be more reactive to different pieces of data. Do you know what I mean? So I think that's also why it is important to kind of go in and backtest. So I appreciate you adding that there.
Absolutely.
But yeah, so if you do your research ahead of time, for example, so then you might know, this is just completely an example, right? In 9 out of 11 similar situations, so for the same kind of print, the S&P 500 was on an uptrend with a negative unemployment rate. And so that's useful to know before the unemployment is released, so you can focus on trading the S&P 500 instead of another instrument that has shown less consistent results, because then you're just kind of jumping in something all willy-nilly, right? Which is not what we do while we're trading. So, now step 5, trade execution. So, if, for example, you have two traders with the same decision. They've decided they're going to buy, they're going to, get in on, let's use an example, the SPY, right? And this could end up with different results, though. One could, take a nice, fat stack, nice profit, money button time, and the other one can end up actually reaching a stop loss and lose a significant amount of money. But how? And why? Well, they both took the same trade. But this moment was just the beginning of an important part of the game, which is the execution. So most traders, many traders kind of buy and then hope, either getting out of the stop or the profit that they are lucky. That is not enough, and that's part of the reason that a lot of traders lose money. So you have to actually ask yourself, and this is why we're talking about planning in advance, and I was asking Sharif, planning the levels. If there is an asset you want to trade, it is, it's relevant and it's valid, I think, as Sharif was kind of saying, to know the levels that you're going to be interested in beforehand. So just like Sharif had planned his NQ trade, that's how you should be planning an asset you want to trade if you've seen through the back testing that it's going to be a relevant asset for an economic event, right? Your process should not differ. If anything, it seems like it should be a bit more rigorous in the cases of these economics. So just because there's a lot of volatility, that does, if anything, that can actually bolster your trading, as we were kind of saying earlier, because you have the volatility to propel you, but that's not going to mean anything if you do not have a well planned out trade. So there we go. So one question you have to ask yourself is, what is a reasonable stop loss for this kind of trade? What's a reasonable profit target for this kind of trade? Should you expect, 20 ticks, or should you expect 100 ticks? And that's why you kind of averaging the move and looking at that range, as we were mentioning earlier, that's where this becomes incredibly key. And that's where it becomes, when knowing your asset that you want to trade, given a certain economic outcome, that's when that also matters a lot as well. Thank you. And by doing your research ahead of time, taking your little notes, you can actually determine what a reasonable stop loss and what a reasonable profit target will be in those situations. And you can gauge the expected volatility and trade duration. There we go.
Bang.
Thank you.
All right, guys. We're moving up again here on the NQ, hence why I'm out of this position. We're moving back into 16.5. It's going to be really interesting to see what we do around here, because last time around 16.5, we got that big move up into 16.518, 517-ish area, and then we had an immediate retracement. But we did find support at VWAP, which means we made a higher low, okay, overall. So it's going to be very interesting to see what we do here. I'm not going to have a bias one way or another, but you know, I kind of have a feeling we're gonna trend up. It's just a gut feeling, but we're going to trade the price action. So I feel like we are going to trend up above 16.5, especially because of this hold at VWAP. I would have expected it to make its way down a little bit more if we were really if we were gonna give up that level. But it looks like we're trending into that level. Very interesting at the moment, so we'll have to wait and see. John Jay. John, what made up a set of, sorry, JJ, not John Jay. JJ brought a good point in the chat. He's like, you know, the Mag 7 may not be as interest rate sensitive as you're making it sound, Sharif, and I would have to agree. I think I misspoke there. What I really meant to say was tech is more interest rate sensitive, especially, you know, the mid and the small cap tech. Because the Mag 7, usually they got a lot of on-hand cash, and that means they don't have to go into the money market to raise funds, right, to expand. They've got their own money, whereas the companies with less cash on hand obviously have to borrow, and they have to borrow at higher rates. That squeezes margins, etc. So he brings up a good point. Thank you for mentioning that, John. He goes on to say, yup, the companies that need to keep borrowing are the ones with more interest rate sensitive, but the futures drag them all. So if the futures are dragged by interest rates, I'd be more cautious because a reversal could happen. Good point. Thank you for that. So keeping my eye again on 16.5, I'm looking also at the Mag 7 to see whether or not we're going to get any correspondence or confluence between the Mag 7 today and the NQ. If you recall yesterday, it was, you know, a very outlying day of rotation where we had positive moves on both the ES and the NQ with mostly negative. I think we closed down negative on all the Mag 7 names. That is a product of rotation. We've been hearing a lot about that this year, or the lack thereof. We've been hearing the lack of breadth. There hasn't been market breadth. It's been concentrated in a few names. Yesterday was one of those days where we definitely saw a rotation come in. So we'll have to see if that kind of pattern persists into today. So far, you know, it's a bit of a mixed bag, so we'll have to wait and see. I saw somebody else in the chat saying that the ES was stronger than the NQ. While they do have a point in the sense that the ES right now is near day's highs, close. Actually, it's not close to day's highs. Sorry, 46.96 is day's highs, but it's definitely making a higher high on the ES, whereas we're not making a higher high quite yet on the NQ. Here's the ES over here. Fabian, if you're able to. This is the flat top that we've been, you know, hovering at on the ES. This is the ES, by the way. Let me put that in. The Chilean nightmare is on his own because Ram went in another day date. So we're going to have to be patient with the Chilean nightmare as he does everything literally around here. So here's the NQ. You can see we haven't made that higher high yet on the NQ. We're still trying in the process of breaking through 16.5, whereas on the ES, we're already breaking through that flat top when we're on our way possibly into that 46.96 area, whatever the high in the algo spike was. So good move up on the future, even though the ES is only up 0.17, the NQ is up 0.31 chart-wise. It looks like the ES stronger at the moment. Look at the ES pump up here, baby. We're about to hit 46.9. Good move up on the future. We're still doing that dance with no pants, though, at 16.5 on the NQ. So haven't decided whether we're going to take this bad boy long or short. But right now, it looks, you know, I'm leaning a little bit more to the long side. Good strength on the market. With respect to some of the Mag 7 names, let's have a look at this. Somebody was asking me, Sharif, is this a bull flag on Meta? So we have that big move up, and then we have a bit of a, I don't want to say a compression pattern, because we seem to have we seem to have a 329 low here. So it seems like a bit of a descending wedge. Oops. Let me put that bad boy in there. Looks like 329 acting as a level of support here. I would have to absolutely, I would have to absolutely say yes. 329 has been a level of support all morning, with the first touch coming at say 10:30, and it's been held up every single time. But we do have a litany of lower highs here on META, so I'm not sure what to make of this quite yet. I think I'd be a lot more bullish if we were to break that 330.5 and make a new high above this crest over here, but nothing doing it quite yet. But keep your eye on Meta. This could just be, a pop-up and a sideways consolidation all morning, but we know that 329 is a support level, so if we get back down there, it might be a nice entry. We'll have to wait and see. But yeah, good look on Meta. Some other names. Amazon, bit zigzaggy. The only thing I can really say positive on AMZN right now is a series of higher lows, higher low, higher low, higher low. So 4 troughs there, each trough being higher than the other. We're still having a bit of a flat top at this 146.5, 146 2/3, but it looks like we're going to break through that quite soon. It looks like here as we pump up here on the future and pump up on Amazon as well. AAPL, Apple, is the dead one again today.
Thank you. You love when I call Apple, because he started calling it Apple the dead one once, and now that's my favorite thing.
Yeah, well, when it's the dead one,
one,
I promise you I will call it the dead one. The reason I call it the dead one today because we're up 0.14. So basically doing nothing. Yeah. Very consolidative holding. This white line over here is yesterday's closing print, so we're just a smidge above yesterday's close, but by no means trending, maybe just some higher lows there. Nothing for me to get excited about. The other one, TSLA, almost the opposite look of Meta here.
Oh, yeah.
Right? Whereas Meta was a bull flaggish, this looks bear flaggish with lower highs, and you have a bit of a flat bottom. So this should be interesting if the market gives up the ghost.
Yeah.
Tesla should be, Tesla sometimes marches to the beat of its own drum, but that 234 base.
That's a strong base too.
Yeah, it held up initially on the big move down at 935, and then we've been holding up right now, but the lower highs calls everything into question because we could get that flat bottom break through 234. We'll have to wait and see. VWAP not factoring much into Tesla's price action today. It's been more trend line based and price action based, with 234 as the flat bottom. I would say probably if we trend up, 238 would be a resistance level. That is the lower end of this consolidation area, that 238 level. So be on the lookout for that if we reclaim and start pumping to the high side. The other one, Google, very sideways as well. Nothing for me to talk about there. Microsoft, zigzaggy, kind of looks a little similar to Amazon, where you have higher low, higher low, higher low, but the flat top not there in the same way that we had it on AMZN. So not liking that look. The other one, last but certainly not least, is NVDA, very strong on the day. It was pumping up after selling off yesterday. Yesterday we had chips very strong, for the exception of 3 names. It was NVIDIA, ARM, and SMCI. Today, all of them, I believe, for the exception of ARM. ARM is down again, 1 2/3%, but NVIDIA up on the day, 2/3%. We have a bit of a flat bottom here at 468.5 with lower highs after making a nice big move up. The lower highs, though, is what's catching my attention, Adair, and that flat bottom at 468.5. So we'll have to wait and see how these pan out. Just want to give a quick synopsis on these bad boys because we've been trading in the future. So nice to know what these guys are doing.
So what you're saying is it's not an ARM day.
Show that takes me to the heart of the market every day. All right, Neil.
My favorite part is you just pop
Neil, you want to do the mic? I have a conversation with you I'd like to engage in at the moment. The Neil is miking up, so we're going to give the Neil just a second or two here to mic up and for the Chile Nightmare to get him set up. So Neil, we know that the Cowboys play at the Bills this Sunday, and we know, and everybody in the chat knows, what the bet between you and I is, which is we're going to do the Sally Up, Sally Down challenge. What's left to be determined, Neil, is what are we doing? Are we doing...
There's only 2 options.
Well, no, there's 3.
What's the third option?
Burpees. I don't want to do burpees.
No.
Yeah.
No.
Thank you. So we're doing squats.
No.
So we're in agreement. We're doing Sally up, Sally down squats. True?
Well, squats is the easy one. Like, look, squats you can get through. I did it the first time I tried it. I did it with air squats and was able to get through it the first time through. I tend to think it'll be more entertaining for push-ups just simply because I probably tried doing that challenge at least a dozen times, and I have yet to make it. I think the best I ever did was just past halfway.
Okay.
So if we do push-ups, I will fall on my face trying to.
I think I will too.
Because I don't have that sense to quit. So I will. I usually face plan when I do it. I go basically till failure. So I've always tried. So I think we should do that because it's more entertaining for everybody else. And that way you don't have to do the whole song because I'm not going to make it through the whole song.
Hey, smart man you are. Okay. I don't think I'll be able to do that as well because there's those pauses that you have to hold, right? So sometimes you're at the top, you're in a static position. That's tough. That's not easy, especially after having done X amount or Y amount of push-ups, right? You're in the static is going to be quite difficult. So.
And we don't have to worry about quality because I know you'll do a high quality push-up. We're not messing around here. We're not doing any half cheating nonsense where someone's like, I can do 100 push-ups. I'm like, no, you can't.
No.
You can't. I can do Mark Wahlberg, I can do 50 pull-ups. No, you can't. You'll do your 50, but there'll be maybe one pull-up in that entire thing. So they're all going to be proper, just so you guys know.
Yeah, I challenged this guy in Mexico one time for a push-up challenge, and this guy, he had no beef about doing them wrong. He was doing the worm by the fact when we were done. I was like, bro, what is this? None of these count. Go away.
If you can't do it properly, don't do it at all.
Yeah, exactly. Okay, anyway, all right.
Can I make one I can make a market observation, can't I?
Yeah, absolutely, of course.
So I don't know if we can come to my chart. Oh, can we? Can we do that? Okay.
Yeah, of course.
Well, I wasn't ready. I thought you were going to say yes or no. Snapchat. I'm in it, but just a reminder on Snapchat. It's trying to take out this high from yesterday, that 16 level again on Snap. If the market takes out the top, now I'm baby in here looking for it to hold the opening range, about 80 to 85. I'm long at 90, but if this breaks out 16 again, I think this is an ad over a 16 if this can take out the top. It did a consolidation day yesterday, did a huge liquidity grab underneath the bottom at the open yesterday. So that's a pretty bullish reversal. I think if it takes 16, it can go. Lots of things moving in the market today. Just be patient. Obviously, we have Fed tomorrow. You can get that sideways action. Looking for some explosive moves and explosive levels. Keep it tight to the vest at lunchtime. You don't want to give away those profits. It's the only new position I have. I still have the other, Rivian and Affirm and Apple short positions on.
Very much for that, Neil. Appreciate that update. And Snap has been quite strong lately. I still think it's a buyout target. That's just my personal opinion.
Yeah, I mean, who uses Snapchat anymore? So.
High school kids? I don't know. People that want to flirt? Children? The Chile Nightmare says children. Adira, you got into a new position. You want to talk to us about that?
I did get into a new position. Yeah. First, though, I would love to read this comment from Matt Booth. If you move the show, it looks like Sharif and Neil are singing a duet. Which I just enjoyed and wanted to put out there. I guess because you were in the two-shot. But I saw that and was like, I'm not going to not address it. I don't know what you were singing.
I don't know.
You were singing something.
All right.
But apparently. But yeah, so I did get into Amazon. Admittedly, probably could have gotten it a little bit lower, but I got in where I did because look at how intensely we are testing this 146.60. It has been crazy. And we have these, and one thing I learned a lot too from Sharif as well is when you see at a key level, which we're very much at, and you see these continued failed wicks in one direction, so the wicks, but the candle closes somewhere, that means it's an important level maybe, especially at these important levels. So these sellers are not having their way. Look at how many wicks to the downside we're getting that are unfulfilled. So I'm gonna stay in here a little bit longer. As I was saying to Sharif, if we break a lower low, I am outie. So if we break below this 146.35, thank you, yeah. Because I think honestly, Amazon's not really a stock that I look at that much, but I saw, I always have my eye open. I have all my mega caps on my side chart, and I saw Amazon doing this kind of, this solid dance with 146.16. If you look at it on the daily, this also seems to be an area where Amazon, look at Amazon, a super key level over here too, because we had a double top. But look at how long we've been dancing around this for. In terms of my out, I do like that one around that 147, and I say that because that seems to be kind of where Amazon, locally anyway, Amazon hasn't gotten much higher. Can we get much higher? But yeah, we'll see what we. Hey, sorry for the out. I'm so sorry. Yes. I wasn't prepared to do that part, and then I could not sing in key. But yeah, Amazon will hopefully be singing in key for me here and breaking that 146.60 top.
I suck too, so don't think I'm laughing at you.
Appreciate. Yeah, I know we're laughing.
I suck.
We're laughing together.
Yeah, exactly.
But yeah, so also I enjoyed that trash talk there with regards to that brings Sally up, brings Sally down. That shall be a very entertaining bet when it occurs. Also, Neil in the chat, Trader TV karaoke night in the new year needs to happen.
Oh, I would be so down. Well, Neil and I have talked about this because, yeah, I live in an area. The Chilean Nightmare is very excited about that. I think he likes karaoke, smashing the bags over there. Yeah, I think that's something we definitely should do around here. In my area, there's a whole bunch of karaoke spots because I live near Little Korea. Which Little Korea is at Yonge and Finch, right? And they love their karaoke up in that place. So, all right. David says, I can actually do 150 push-ups, so step off, Sharif. Glitch says I can do 50 perfect push-ups at once. So, shout out to you, man. That's not easy to do. Good for you. Pump it in a pickle says, no, JC, he says, no, this is a fitness channel. I'm assuming he's responding to somebody else. Nando's Art says, I can do 100 push-ups, didn't say in a row, or in a row, and 100 pull-ups in a row. Shout out to you, man. That's not easy to do either. I can do all those, but just not in a row. I can't do 100 pull-ups in a row. I'm having trouble believing you can do 100 pull-ups in a row as well.
Pull-ups are crazy. Based
on my fitness experience, which is over 20 years. Yeah, 100 pull-ups in a row. I'll have to see that to believe it. Yeah, or a CrossFit, even CrossFit people who do the kipping pull-ups can't do 100 kipping pull-ups in a row. And kipping is hard to get the rhythm, but easier on your muscles because you're using your core to generate movement. A Trader Forever says, I once did 200 push-ups, just not in a row and not on the same day. Atta boy, be honest about it right there. No, I don't mean to put anybody on blast. I need to see this 100 pull-ups in a row type thing because that's big boy. Trenches Trader, 100 pull-ups. All right, okay. All right, guys, we're doing that dance again at 16.5, Adira.
Yeah.
We're gonna start the lesson again in 15 minutes, guys. We're gonna do it once every hour. But Chilean Nightmare, if we could look at the chart over here.
That's a crazy area of resistance.
Yeah, because how many times are we gonna come into 16.5 and reject off 16.5? I don't want to jump into this trade again too quickly because I feel like it's quite bamboozling. But we're getting into that level and we're doing that wick reject thing where we wick above 16.5 and close below it. We did it a little bit here, hence why I got short and took it down to VWAP, but we're kind of doing it again. I didn't expect us to reject off 16.5 again, if I had to be honest. I thought maybe the second time we'd actually reclaim the level, but it's doing it. It's doing it again. I just don't want to jump into the trade. I want to see more. This is the 1 minute chart, so a lot of noise, you know that on the 1 minute chart. On my side charts though, I look at the 5, and that's better for me. So yeah, very interesting here at 16.5 on the NQ, up 0.25%, a little bit more, almost 1/3%, but nothing for me to do quite yet, as I really want to see a bit more. Quaduken once beat David Goggins in a pull-up contest. Really? Come on
Sharif
now.
has some questions.
Really?
And some thoughts.
Brendo's actually the one that brought me or showed me David Goggins. I had seen his face, but I didn't know too much about him. And Brendo was like, yo, this guy was on the Joe Rogan podcast, and this guy's out of his mind, psychotic fitness person. So then I started looking into David Goggins a little bit. And he's just, he's got a mentality that is like 1 in a million. And obviously the mentality kind of helps carry his physique a little bit, because if he doesn't have that tough, what mentality, well, he's not going to make the kind of gains that he's making.
Yeah.
Right? The guy's an animal. Yeah, Quaduken is joking. I know you're joking, brother. I'm just, I'm reading out your...
We're just having fun.
Yeah, exactly, of course. He said, Trench's Trader says that's cap. Yeah, I missed the cap part. I should have seen that. Sorry, I know what you meant by that. No worries about that, of course. Thank you, David Stradler. 30-year bond at 1 o'clock. I have to remember that because you guys recall my, dumb self forgot about the 10-year yesterday, and then I was in a futures position. It tanked on me initially, then it skyrocketed. So we have to be wary of the bond auctions when we are in these Mag 7 futures trades, which are really influenced. Today, guys, we have a 30-year bond auction at 1 o'clock. The previous print, 4.769. Again, like I mentioned earlier, the higher the yield, the less the demand for the Treasury. The lower the yield, the more demand. And the lower the yield, the more bullish we should be on the market. The higher the yield, the more bearish we should be on the market. So keep, get your timers ready or your stopwatches ready or whatever. Because in about 11 minutes, we're going to be having this auction. Typically, I get the results a couple of minutes after, but some people in the chat, they get it earlier. If you guys get it earlier, definitely tag me. Takes a few minutes for this app to populate right here. But as I look, the futures have rejected 16.5 again. And I'm not involved in this trade. We did the whole wicking dance thing. Chilean Nightmare, come to the chart if you're able to. The 16.5 area, we wick, and then we reject. And now we're making a big boy move down. Do we make a lower low, though? So we already have a lower high, okay? We didn't get to 16.518 or 517 or whatever the hell the high of the day is on the NQ, okay? Or this, I'm talking about this area over here. We made a lower high. Now we know last time we bounced off VWAP to the T. So do we make a newer low this time around? I'm going to be watching out for that on the future, but nice rejection, off 16.5 for the moment. So keeping my eye on that.
Yeah.
Quickly, just looking at some chat over here. What did Patrick say? Patrick said something earlier. I missed it. Okay, well, I can't go back and scroll, so too bad. Mr. Longshore says MNQ independent. Look, I'm not really doing chart patterns when it comes to the future. I don't typically use chart patterns on that. I'm using levels, baby. I like the 100-point levels, and I like the close, and I like key resistance levels on the daily. They don't have to be the 100-point you've seen on the ES. The 50-point level has been very important on the previous contract, the December 15th contract, where that 45.50 level in front of 4600. We held that level as a key support level for weeks, for almost like several weeks. So I don't use chart patterns on the future. I use levels and previous closes. I look at 100-point levels, key levels on the daily or the hourly, and then VWAP, of course, as we look to see if it's being respected. Nando's Art. My fitness experience was over 20 years, and I curl 50-pound dumbbell curls with a drop set with impeccable form as a warm-up. That's slow 50 curls, no swinging. Shout out to you. I don't do 50 pounds as a warm-up. That's usually like either my max or working into my max, but it sounds like you're a monster. Shout out to you. And hey, I can only aspire to be like you one day. Patrick Langlois was just saying I stopped out. I have a hard time with these announcements. I do respect that. Some people don't like to hold something into an economic event. In this case, we'll describe the 30-year as an economic event.
Yeah.
Coming up. Anything on your side today?
Yes, actually, William Randolph in the chat with something I want to pull it up because I think it's interesting, but I'm not sure necessarily I'm 100% in agreement here. Tesla looks interesting and wanted your opinion, question mark. The 3-month chart looks like an inverse head and shoulder. Personally, chart looks like April-May setup that leads to big run, that lead to big run up in June. Thoughts? I'm not seeing a head and shoulders. I'm going to be really honest with you, or an inverse head and shoulders. What I am seeing, though, is a massive resistance level just below this 1100. Like, look at this. We have so many, Tesla is really staying solid at this 1078. This is on the 3-month chart here. Like, this is so much a ceiling for this stock. And then in terms of floors, we have a solid kind of level, kind of around where we are now, that 237, 240 area. Like, look how much earlier, like 2017, 2019, we kind of respected that range. Now, again, we're seeing like another solid kind of floor for this stock. That 116 area that we had earlier was kind of forming. Now we're playing at this level here. Like, what point I'm trying to make is I appreciate that you brought this up, William Randolph. Though I may not necessarily 100% agree with regards to the inverse head and shoulders, I do think that this very solid ceiling around this 1,000 area and this nice floor-related range at this 234 is, I think, really relevant. So thank you for bringing that up. And then William Randolph saying, sorry for my message. They limit the number of words and make it tough. No worries. Prediction, Tesla about to take off and have big move up. I would say, yeah, I mean, like, given how long we danced in this range earlier, I would say we probably have a little bit longer for range action to go in this 3 month. That being said, I think if we go up, you're right, like based on past action, this thing I think will run up, should it run up. And I mean, Tesla, do not underestimate Tesla. Don't underestimate Tesla. That did not work.
Uh-oh.
But yeah, Tesla's crazy. There we go.
Tesla's always crazy. All right, guys, we are brought to you by Benzinga. Use the link in the description for Benzinga's greatest deal of the year, including 75% off Benzinga Pro. Monthly subscriptions now as low as $49.25 a month. The everything terminal for retail traders. Visit pro.benzinga.com and use the coupon code TTVNOV. TTVNOV for November. We probably should update that with them to save 75% off now. New subscribers only, and conditions do apply. And Adara, you know exactly what I'm going to do right now.
Oh, I do.
You do.
Where it is. I know it's here. There it is.
Adara uses Benzinga every day, and she's quite adept at using it.
I am. Look, we just got another thing. Just give me 5 minutes inside Warren Buffett's claim that he can fix the national debt in 300 seconds. So that's a story that you could read on Benzinga right now.
Yes, ma'am.
Now we just got an update on Boeing. US FAA proposes 3 directives to mandate engine housing inspections. Look at that, right? So Benzinga's keeping me updated. It's keeping me, keeping my brain active here with regards to trading, with regards to market news. You also get economic updates on the fly.
Yes, ma'am.
So I'm very solid, and I love just talking about Benzinga here.
Absolutely. And I used to use Benzinga as well, and I could probably get an account. I've had some. They're excellent. They have a stock scanner. You can create watch lists. The news feed is fantastic. We talked about using that as possible catalyst for organizing yourself in the morning. Of course, you can just save yourself that whole thing and subscribe to our watch list, which Adara does every day. Watchlist.tradertv.live. Get your subscription. It gets sent to your inbox every morning. And Dara always does a bang-up job having that one prepared. We all use it here on the floor. All right, guys, 5 minutes, or 4 minutes, pardon me, until we get the 30-year auction. We're going to see how that auction affects markets, and we're going to go right back in to the lesson. We've been talking about today how to trade economic events, like the CPI that we had this morning, like the PPI we're going to have tomorrow, like the interest rate decision we're going to have tomorrow at 2 o'clock. So PPI coming out at 8:30 tomorrow, the Fed rate decision coming out at 2 o'clock. After that, we're going to have Jerome Powell take the podium, take questions from reporters at 2:30. It's not an economic event, obviously, in and of itself, but it is quite market moving, especially if he says something novel, like not higher for longer. That would be great. Obviously, he probably won't say anything like that. The Fed, they're not here to bamboozle the market. They're here to kind of telegraph their positions, and that's kind of what they've been doing for the last little while, despite the market not liking what they have to say about elevated for longer. But that's the look there. Make sure to mark your calendars or set your alerts or whatever you need to do to get ready for that. Yes, the 30-year Treasury is coming out, Nolan, in about 3 minutes. We'll be covering that live for you here. With respect to what the market is doing, very consolidative right now, just a smidge below that 16.5. I'm talking about the NQ contract. Fabian, if you're able to come to the chart, at that 16.5 area. We dipped, we got into it again, wicked, rejected, but now look at this. This is a higher trough now, so we now have a higher low again off, comparing it to the one that we had previously, which was at VWAP, which is at that 16.4 1/3, 2/3, pardon me. Now we're getting another attempt here, looks like at 16.5, so very choppy. No direction. I think maybe this is waiting for the 30-year to come out before we take a decision about which way we're going to trend, or maybe we move sideways all day. I talked about earlier about how the economic number that we got today was in line with expectations. And when you're in line with expectations, it kind of puts you in no man's land, no woman's land, or whatever you want to call it. It's kind of hard to determine where we're going to trend. And you've seen that today. We were up, we were down, and we're somewhere in the middle now. At this 16.5 level. We'll have to wait and see what we get. A couple minutes left until we get the 30-year print. But 3 Drive says bond dump in 2 minutes. Christian says moon. Yeah, all right, maybe we do get moon. Patrick says I didn't like the action before the 30-year thingy. Okay. I've never seen it described like that, but we're gonna go with it, Patrick. Lolo says, damn, BTC might be over, melting down, might sideways to 40K. We'll see what BTC does, man. BTC's been an absolute rocket as of late, so some profit taking at these levels, not an unusual thing. A couple of minutes, 1 minute left, looks like as it here until we get the result of the 30-year bond auction. What are you looking at over there?
Yeah, Amazon has made a higher low since I've been in it, but it will still not break this flat top. Thank you. I still think it's a good look. Like I said, if there's no lower lows, I'm still in this trade. Also, shout out to the sweet and salty nut in the chat. Don't under Tesla mate. There we go. Thank you. I was trying to find a way to make a pun out of that, so I appreciate them for coming correct there. But yeah, so
we should be getting the bond anytime now.
We're waiting and seeing.
Yeah, well, we'll get the market reaction. We'll know, right?
Oh yeah. Hopefully it's positive because Amazon cannot get more consolidated.
I have to change my battery, so just keep talking.
Of course, yeah, for sure. No worries. Yeah, so I mean, right now, Amazon kind of still doing what Amazon has been doing for the past. How long have I been in this? Okay, I've been in this like half an hour now. Amazon's still kind of being Amazon. Let's look. Oh, we just took a little bit of a hit there. Let's pull up the SPY. Oh, now we're moving up. Okay.
Thank you.
So, okay, so yeah, it looks like we are green from what I can tell here. Yeah, not too much happening. I think the market has reacted a bit strongly to the bond auctions in the past. Like right now, if it's out, I'm not seeing very much.
Yeah, I'm still waiting.
Because I'm on the SPY. Okay, it looks like we maybe got.
If anybody has the result in the chat, please tag me. I know typically some people in the chat get it quicker than I get it on my app. I still have that, clocking sign waiting for the actual print to come out. But yeah, some people in the chat typically have it a little bit sooner.
Yes.
We still really haven't done much, Adara. We're still at 16.4 and high 90s, mid 90s. They haven't decided which way we break up or down. So I don't know if the result is out quite yet. How's that position looking?
Yeah, Amazon is looking good. Also, Steve G in the chat, is that bond shaken, not stirred?
Well, maybe we should slow clap.
I mean, I will fast clap, but yeah, one could also slow clap. I mean, yeah, Amazon's still chilling. I honestly do not have much to say about Amazon, but I will mention for Susana Pena, what is the thought on Tesla? Let's look at it on our 5-minute. Honestly, does still, as Sharif mentioned earlier, I think Sally Huang in the chat also put it out there. There is a bear flag happening on Tesla. I would say honestly, a little bit too of this. You've got the this flag pull down lower, which kind of does suggest the bear flag, but also we have.
Oh, there we go.
Amazon just broke 146.60.
Yeah, okay. So now we got the result.
There we go.
All right. Well, I still don't have the result, but the market kind of speaks for itself there.
Yes.
Do we trend up? We're pumping up here on the NQ. We're about to break through 16.510. We'll see if we break that early morning high of 516. Nice move up. But yesterday we got a bit of a bamboozling print where it went down, then it spiked up. But right now it is headed to the high side, everybody. I still don't have the dang print. Okay, Kevin Johnson. 4.344 echoed by Matthew as well. So they're in agreement there. That makes it lower than the previous print. Like I mentioned, the previous 30-year auction was 4.769. This time comes at 4.344. The market liking that. I saw somebody in the chat say the worst 30-year auction in 10 years. That is what I heard Rick Santelli say on CNBC yesterday. He was talking about how the 10-year was not met with any exuberance. Doesn't really matter, though, because I think what we're what we're trending off is what the previous print was, not historically what is the demand for the 30-year and the 10-year, but we've been talking about this. The Japanese have been buying less and less of U.S. Treasuries as they're buying their own bonds now, and the Japanese and the Chinese are buying less as well because of their current economic situation, and the Saudis, really the Saudis are the ones throwing cash around right now, and you know, they're supposed to be buyers as well. Don't know if they fill the gap that's left there by the Japanese and Chinese, but one of the biggest things to look at with these bond auctions is who is doing the buying, because then you can kind of gauge what the situation will be next time around. Do they have the cash? Do they have the intention to spend, or are they shifting their priorities? We're pumping up here on these markets. Let's see if we get that continuity, but it's been a good look so far. You know, getting into this without seeing the direction, I feel like a lot of FOMO, not going to lie. You know, not getting into this, but whatever. Yeah, 3 Drive says worst 30-year bond auction in 10 years. Bankers holding bag, he says. Yeah, I'm not going to pretend to be a bond expert for the limited information that I have. I'll convey to you guys, but yeah, that was what I heard yesterday, that it was not well met. I'm talking about the 10-year. Looks as if that's the same case for the 30-year. All right, Chile Nightmare, let's restart those topics. It is 1 o'clock. Time to speak about.
Yeah, rewind.
Rewind the lesson. All right, we're talking today, guys, in case you're just joining us or just joined us not that long ago, how to trade economic events, okay? Like the one that we had today with CPI at 8:30, like the one we're going to have tomorrow with PPI, not as important, obviously, tomorrow at 8:30. And then there's another economic event, obviously, which is the Fed rate decision at 2 o'clock, widely expected to come in as no hike and no cut. But anything can happen. So how do you do this? What's the first step? Well, as you see there, the first step is to gather data. So what data are you gathering? Well, you want to see, first of all, you're gonna have to determine what economic event am I trading. Let's just use CPI because that's the one we did today. So you have to gather the previous release. What was the November CPI? Now, it was the November to November, right? So we know that CPI came in below expectations in November. So we have to gather the previous release. And then we have to find out what is the market expecting this time around, the street, the market, the analyst expectations. That's what we're looking for. So here, you're looking for what the market is expecting. And then the range, okay? So you have to go back and look at, all right, in October, we had a CPI print, 0.1% above expectations. I'm not saying that that's what it was. I'm giving you an example, okay? 0.1% above expectations. So if the street was expecting a 3% year-over-year print, we got 3.1. What did the market do? And what is the average range if I look at a period of 12 months, all right? What was the average range plus or minus the expected print? And then I'm looking for the surprise range. So a print that surprises the market, that gets it to trend either up or down. The perfect example would be the November CPI print, when we really started skyrocketing. So I have to determine the surprise range for I have to determine the range for the surprise print. So is it 0.2% away from the expected that really helps propel or tank the market? Is it 0.3%? What is it? So I have to determine what the normal range is and what the surprise range is. You're only going to be able to do that by going back and gathering the data and acquiring that data and dissecting it or disseminating it or whatever the hell it is.
All great words.
Yeah, right? The second one is back testing. What are we doing here? Now that we understand the landscape, we can prepare to potentially trade the release. We can't be certain about the future, but as a trader, the historical information is all that we have. You can use your own experience, obviously. You can use your own systems and what you've seen in the past and what may happen in similar situations. That's if you really have experience doing this. By back testing before the release, we can learn what instrument we should trade after the release, because we prefer to trade the instrument with the highest correlation to this event. We can explore the market logic for this specific event using back testing or manual research. We don't know if the results will be negative, positive, or as expected, but by doing the work ahead of time, we can determine what will be the best trading strategy for the particular situation of these three possibilities, that being positive, negative, or as expected. This allows us to have a clear idea of how to capitalize on each situation and to trade calmly and effectively rather than panicking after the expected market results. So here's what I want to say about that. With respect to finding the instrument that correlates that correlates the best with the economic event, that's going to obviously have to be part of the data gathering. Okay, you can do that separately, or you can do that within the data gathering stage. So what do I mean by that? So if I know that when the NQ has a surprise print, whether to the high side or the downside, what's most likely going to react most closely with that? Is it the NQ? Is it the ES? Is it the Russell? Is it the Dow? Or is it anything else? Is it a Forex? Is it actually an equity? And the only way to do that is to go back, look at the charts of each of those ones, and it depends on really how many you want to put in your pool of analysis there. Go back, look at each of those instruments, see which one reacted best with that economic event. So if we have an above average CPI print, in this current economic environment, we're likely going to trend down on stocks. So if we get above average CPI print, and say in September, I go back and look at what the ES did, what the NQ did, which one reacted best, which one was less bamboozling. So what you're trying to do here is you're trying to see which instrument is most correlative with that economic event. And that may differ, right, from economic indicator to economic indicator. Maybe the CPI has a better correlation with the NASDAQ, whereas jobs has more correlation with the S&P. I'm not saying that's the case. You need to make that determination by doing your data analysis, okay? All right. After the release, the real-time analysis that you're going to do now. Once the news is released, you'll be in a different situation. The markets start immediately to move faster, become more volatile, and sometimes move without logic, sadly. To trade that situation, you must do three things. 1, understand the new information. 2, analyze that information. And 3, plan the trade. And so one thing that I kept harping on when I talked about this the first time around is understanding the current economic climate that you're in. So if I get a jobs number right now that shows unemployment went down and the amount of jobs that were added to the economy went up, in normal circumstances, that would be a bullish thing. That would be a bullish result. And the markets would trend up off that. However, that is not the current economic climate that we're in, sadly. Now, if we actually have an increase in the unemployment rate or fewer jobs added to the economy, we're likely to move up. And the reason is because we are looking for weakness, a little bit of weakness in the job market to allow the Fed to start cutting interest rates. And when the Fed cuts interest rates, that's typically usually bullish for equities, okay? So that's the first thing we need to know when we are doing this part of the analysis. Now, when the event occurs, and once you have understood the new information, you already know which market to trade and in which direction. That was part of step number 2. So you are prepared to enter your trade immediately to capture a profit from the expected volatility. For example, you could already know how much the release is surprising if the GDP expectation in this particular case is 2.2%, that's the expectation, but what actually came in is 2.8%. In normal circumstances, the market would trend up. In this circumstance, not really sure, right? GDP has been one of those gray area ones where we don't want the GDP to come in too weak because we don't want a harsh recession. We're looking for that soft landing, right? So GDP has been a tricky one. What's been less tricky is the jobs number. The weaker the jobs number come in, the more the market goes up. GDP is one of those ones where it's a little bit in the gray area, okay? If the release is much stronger than the expected value, you already know the best market to trade and you are ready to execute the trade. Or if the release is anything less than much stronger, you would know that it would be the most prudent to skip the trade. Many wise traders have noted that a key to long-term success is avoid taking trades that are less than ideal. And I think today is a perfect example, because what we did was we got a CPI print in line with expectations. And those are one of those ones where you don't really know what the market is going to do. Does it trend up? Does it come down? Or does it move sideways all day? Right now you can tell we're up 1/3%. So we're kind of just, barely in the green zone. So it's one of those ones where the market doesn't really digest it and make a clear decision one way or another. To know that it is to know that this is the highest print we've gotten in the last 4 years, for example, helps you to get the perspective and the fact that, let's just say, for example, 5 out of 6 times in those past 4 years, the S&P 500 moved up following similar releases supports your idea to actually trade the index. So that goes back to choosing which instrument we want to trade based upon what the expected result is and what the actual result is, okay? What remains is to form a plan for how to trade, also known as executing the plan, okay? Now that we understand, next topic. Now that we understand the release and its implications, the numerical difference between the actual and expected doesn't mean anything until you have a relative term attached to it, such as much stronger or a bit weaker. And this is what I talked about before. So when you're doing your analysis to see what CPI did, for example, in November, how much it beat by or missed by, you need to be making ranges. So if it's just a 0.1% increase above expectations, what did the market do? But how about a 0.3 or a 0.4% increase or below expectations, above expectations or below? How did the market react then? You need to be able to categorize those ranges because it's going to make a difference about whether you get into the trade or not, right? One of the most important things about trading economic events is to choose the right instrument to trade. Like Adara was making the example earlier, maybe trading the euro US dollar is not such a good idea for the jobs number because you don't see a good correlation between that Forex pair and the actual releasing of the unemployment rate or the non-farm payrolls. But you happen to be able to see a good correlation with the S&P 500. So that's what you need to be that's what you need to be looking for. By doing the research before the event, you can see that trading the S&P, for example, would be much simpler in terms of volatility and choosing a reasonable stop and profit target. We'll get to that in a second. For example, by doing research ahead of time, we know that, say, for example, 9 out of the 11 similar situations, the S&P was on an uptrend with a negative unemployment rate. And that would be normal. That would be the case in normal circumstances, but we're not in normal circumstances. This is very useful to know before the unemployment number is released. This means we can focus on trading the S&P instead of another instrument that has shown to be less consistent with the behavior after that release. So important to see whether there's correlation or not. And lastly, but certainly not least, is step 5, how to execute the trade. This is going to require obviously selecting the instrument that we want to trade based upon what economic indicator is being released, and then going and doing a chart analysis on that particular instrument. So if we're going to trade the NQ, what I want to see is local highs, local lows. I want to look at the 100-point levels above and below. I want to look at the previous day's close. I want to look at the hourly or the 4-hour to see if there's any consistent level of resistance or support on that 4-hour, that 1-hour, whatever I'm charting. Like when I was talking about the ES every morning on the morning show, and I do the little charting there at 9 o'clock, how many times did I say to you guys that 45.50 on the December contract, the old contract, was a level of support? It goes back to almost the second week of November where we kept bouncing off 45.50. Now, it's not the 100-point level. It's not a closing print either, but it was an important level on that particular instrument in that particular time frame. So I have to make note of that. So this part over here, knowing how to execute the trade, requires charting and support and resistance analysis. So that's what I'm looking for there. So based upon that, I'm going to know, where my stop should be. So if I know that 45.50 on the ES was an absolute banger of a support level, I'll have my stop loss a smidge below that 45.50. Okay. I also have to look and backtest to see when we got these surprise moves, either on CPI, employment, or whatever, how much did the market trend after that? Was it a 50-point move? Was it a 100-point move? The reason that's important is because that factors in to where my profit taker should be. So if I know that on average, when we get a surprise beat on CPI, we're likely to move up 100 points, I'm just giving you an example, then my profit target should be in the range of 100 points. But however, if the majority of the surprise beats were only 50-point moves to the upside, well then my profit taker has to be within that 50-point realm. It can't be at that 100 point because that'd be an outlier and that would be stupid, right? Because you're not basing it in reality, in fact, right? Unless this time is going to be an outlying event, and that's nothing to bet on.
Yeah.
So that's what I would say there. And last but not least, a question we have to ask is what reasonable stop loss of this kind of trade? Okay, so I explained that part already. Yeah, that's basically it. You got to do the charting. That will influence where your stop is going to be, where your profit target is going to be, and those are the two things you obviously have to determine. Your entry is going to be based upon whether we move up or down. So.
Yeah, and thank you so much for that very thorough explanation. I really appreciate that. Also, I saw a question earlier in the chat, and I'm so sorry I don't remember who it is, but if it was you, shout it out. But I know someone was asking, like, you know, does it make sense to kind of hedge, like, for example, like do, you know, an NQ long and then I think an inverse, I forget exactly what it was, and then have them at the same time if you have really tight stops. And I would say, I mean, if it's part of your plan, right? If you know that you know, the things that you're trying to hedge against each other, these two assets or these two indices or whatever are actually, you know, reacting in tandem with each other, if you know that they do have a reaction and it could go either way depending, then you could do that. But I would say everything has to be planned out, like, right? That's what we're saying, I think, with regards to all trades. So I just wanted to put that out there. Whoever's question it was, if you are still here, please let me know. I may have, I want to make sure I interpreted that correctly. It was a while ago. But yeah, I thought that was an interesting thing there. Also, yeah, I can talk, some people mentioning this Amazon long in the chat. Ultrafire saying, what did you see on that Amazon long? Yeah, so what I saw was, and I can talk about this because I'm pretty proud of this trade in the sim still, just be wary there. But yeah, so I saw this top of 146.60, right? We kept getting close to that top, not breaking that top. Then I was noticing as well, we had higher lows. I said it right the first time. Oh my gosh, shocked. Higher low, higher low, higher low, higher low, higher low. And then also, yeah, and we also still kind of had that flat top, right? So I was like, you know, I'd like to see us break that. But even while I was in it, we already had made another higher low. So I was pretty comfortable there. I arguably could have gotten in a little bit lower. But you know what? Happy I got in where I did. If we break below a lower low, I am outie, because we're kind of now in this upward channel that I would like us to not, you know, break out of. But also, too, I did another thing I'm trying to do more of lately, which is I checked other time frames on this. So if you look at the daily, Amazon on the daily showing a lot of kind of run up here at this 146 to 147 range. This is clearly an important range for Amazon. And look where we had that double top earlier. Same kind of range, right? This is slightly lower, but yeah, I just think it's really clearly an area of note when I looked at it in multiple time frames, which, as I said, is something I'm trying to do more of, that multi-time frame confirmation. But yeah, so thank you for asking, Ultrafire. Yeah, I appreciate being able to go over that. This was one that I did plan out that I had been looking at for a while before I entered. Looks like we might be making a lower low though, so I may have to make my exit here because I don't want to overstay my little welcome. But yeah, I mean, not a bad trade. I'm pretty proud of how this trade went. And I took also, I think with regards to part of my planning process, I'm trying to be more cognizant of how many shares I'm taking with regards to each trade as well, right? So here, I took a little bit more than I took on those early NVIDIA trades because NVIDIA, I find, tends to move a little bit faster, whereas Amazon, I think we had a very clear setup. I find Amazon moves a little bit slower. And so I was like, you know what, we're gonna get a little bit more here. So that is where I'm gonna go. That's the Amazon sitch. I'm also watching the Tesla situation as well, because we're not gonna underestimate. Shout out again to I think the sweet and salty nut for that one. But yeah, like let's look here, because I was watching Tesla because we were having that, as Sharif pointed out, as Sally Huang pointed out in the chat as well, flat bottom with lower highs. But it looks like we almost wanted to break a higher high again. But yeah, I'm keeping it. If we break a higher high, I could go long. If we make, you know, a lower low, I could go short. I'm just very cognizant of what Tesla is doing because I don't mess well with Tesla. But Tesla will mess with you if it gives you the opportunity, or if you give it the opportunity. Because the market doesn't care about your feelings, but Tesla really does not care about your feelings. Yeah.
Yeah, Tesla's just here to take your money. No, I'm kidding, of course.
It's here to kick butt and take names.
I know, right? No, Tesla, yeah, tougher to trade, obviously, but today definitely stuck within a range there, Adara. I like that 238, get it together, Sharif. 234 level as a level of support. We'll see how that ends up playing into the day's trade. Fabian, if you're able to come to the chart, my man, thank you. We have multiple touches off that 234 level. No, wrong chart, Fabian. That's all good.
Oh, was it my chart?
Yeah, you had your chart on there. 234 level on Tesla, I mentioned earlier. We got a VWAP retracement, looks like on the bond auction, but looks like it's coming right back down. We'll have to wait and see what Tesla does. Bit of a tougher look here for Tesla. Yeah. We'll see. I'm involved in another futures trade here. I'm taking this bad boy long. We'll see if we're able to hold up 16.5. We're coming back into 16.5 here. I'm going to have to pack my patience with this one. I will get out if we really break down aggressively. I got an 03 print there, but looks like we claimed 15. We claimed 500. We're coming back into that support level. I'm looking for support to hold up here, but if it gives up the ghost, I'll just get out. Much smaller size this time around than the initial time, obviously, because it is the second trade, and I don't want to give up the P&L. Mark Susi, Disney, double bottom or short setup. Let's have a look at Diz. We haven't looked at Diz in a while, and Disney is an interesting one. Because it was in the news today for being overtaken possibly by Netflix next year as the #1 advertising generator for these streaming services. So it's supposed to beat out Netflix this year, but next year it's supposed to be all Netflix. We'll have to wait and see whether that materializes or not. But here's the look on DIS. It was a 92.20 close yesterday. That's yesterday's closing print. And we are sub that right now with a 91.25 bottom. Hard for me to bamboozle a trade in at these levels because we are at day's lows. And that's not an area where I want to get in. I feel like I'll be chasing it at this level. So I'd like something in the vicinity of a 91.50 pullback. You have a bit of a consolidation base there where we trended for about, the better part of an hour before we broke down below that 91.50 level. If we get back into 91.50, that would be an interesting short for me, right? Either 91.50 or VWAP, which is at 91.70-ish. I would be more inclined to look at that 91.50 level, but we'd have to make it back up there. Otherwise, I wouldn't be interested in this trade. I'm not interested in getting in short at the lows, nor am I interested in buying it up here, unless there's a clear support level at this level, in which I don't see. Maybe we did touch this level not that long ago, actually, maybe back on the 6th of December, but it's just like one touch. So yeah, Disney, not for me, not at this price, and not where we are currently. Sorry. Kevin Johnson, what order type do you use for trading futures? Limit orders, my friend. I only use limit orders. I don't use market orders. Just force of habit. When I was, when I first started trading, the trading program that I was following was all, spoke badly about limit orders and told you all the, market orders, and told you all these horror stories about things that happened with market orders. So that scared me straight, and I've been using limit orders. That doesn't mean there isn't a time and place for market orders. And I'm not going to go through this again because I got into a whole big thing about whether market orders, whether limit orders, pardon me, could be used as stop loss orders in the pre-market. So I'm going to say this. I'm going to say this once. Yeah, because I actually had to go. I had to actually go and record my screen to prove it to a viewer, which I still have, by the way.
He was very excited about it too.
Because I knew I was right. That's the thing. Limit orders, your stop losses can be used in the pre-market so long as you use a stop limit order. If you use a stop market order in the pre-market or the aftermarket, it's not going to trigger, and it's going to go right through your order, and you're going to continue to rack up losses some way, somehow. So if you want to use stop losses in the pre or in the aftermarket, they got to be limit orders. But yeah, it's neither here nor there, I guess. Yes, please smash the like or subscribe, or this individual is going to be very upset.
I pity the fool that doesn't hit the like.
What? Oh my God, it's new!
That's fantastic.
Neil, I was just watching Neil for that, and he was so happy. He was so proud he got you there.
That was fantastic. Fabian, why didn't you put the mohawk on his head? We talked about this. We want to put a mohawk on your head, Neil, for the A team because you were doing the pity the fool Mr. T thing. So we thought a fantastic look would have been a fake mohawk, you know?
Also, that set is amazing. Like that green screen, like, oh, it looks so good.
Yeah, I know.
I love
And
that.
it's okay. I'm not going to mention the fact that I shot a new one like 2 months ago. Still hasn't been done,
You
by the
did?
way. Yes.
Was that with the beer?
Yes.
Sans beer?
That one, he said that one had priority. I guess I just have to get trolled over and over and over until I'm, you know, red in the face. But thank you. I'm just busting chops there, Fabian. What's that? What'd he say? There's something hoodie involved. I can't hear exactly what you're saying, Fabian. I like it. I'm not going to say that out loud, but I do like it. I do like it a lot. I appreciate you, Fabian.
I'm excited now.
Mohawk not included, said Darwin. I love that. Yeah, the Mohawk has to come in, man. It's so perfect for that particular moment. Anything here? Hit the Sharif one, LOL. No, Bob Dub. Don't do it, Neil. See, I was ready for that. He's going to do it anyway. Once I start concentrating on something else, he's going to smash the Sheriff. All right, all right.
I'm like, his hands are ready.
Yeah, I know. He's quick with that, too. Here he goes. I see his hand moving. All right, Adair, anything look on your end there?
I can talk about Amazon, which is another fat finger scenario, much to my great disdain. And it wasn't even an issue of like, oh, where are the keys where I pressed the wrong key. I think it's because I've been shorting so much lately that I went to end the trade by pressing the buy button. Instead, so I went to end the trade by pressing the buy button, but I'm in a long, so that means I got more shares, right? Either way, I made profit on all the shares. I think it's another issue, as I was talking about this yesterday as well, with regards to that ill-fated, accidentally adding double what I wanted to on Eli Lilly because I forgot to cancel and then it went against me scenario, is I need to be more cognizant of the fat finger scenario. I need to be like, you know, doing like typo checks. Like I need to be proofreading my trades. You know what I mean? To make sure there. Also, Lincoln in the chat, how long has Adara been trading? I have been in the sim still. I've been for about 2 months, I would say now. A little over 2 months. But yeah, this has been, wild ride, wild journey. Appreciate everybody, you know, coming along the ride and everyone supporting me. Sharif and everyone as well. But yeah, so that is the take there. That is Amazon. Should have probably taken some more profits out at 146.80. The plan was to take some out at 147, but I should have been maybe planning a little bit better. Because, you know, I find I'm on my best behavior when I'm a little bit scalpier.
Interesting.
So yeah, so I think just being aware of that and being cognizant of that, probably, helpful. Good to know.
The other stock I wanted to mention on the day, not one that I've been trading, but AVGO, guys, Broadcom. I want to talk a little bit.
You had a good trade on that yesterday.
Yeah, it was good, but you know, I didn't touch it today. But I got to tell you, this is one of those ones where it was so obvious that it wasn't. And the reason I say that is because market analysts have been talking about Broadcom, I think for almost 6 months now, as a possible alternative to NVIDIA. So many market analysts and market participants can't stomach the valuation that NVIDIA is at the moment. They're just like, it's too much for me to handle. So they looked for an alternative, and what seemed to be consensus amongst them was Broadcom was a possible one. Obviously, we know AMD is as well. But Broadcom, more specifically, was mentioned over and over and over by these analysts. And so, I mean, I just need to show you a daily chart here. This is a monster. Guys, in October of 2022, when the market bottomed out, we were at $425. We're about almost 1,100 bucks now. It's been an absolute rocket to the upside. There's no question about that. And the last few days, it's really helped jettison. We were...
Jettison, love that.
December 7th, Adara, okay? December 7th, we got a 888 print, $888. We're at $1,067 today. It's been a beauty, good continuation. Much like with the rest of the microchip sector, yesterday was very strong, saving except for NVIDIA, ARM, and SMCI. SMCI has also been a very interesting play as of late. But yeah, I just wanted to mention Broadcom. Fantastic look on the 5-minute here on Broadcom. You're looking at higher lows all throughout. It held VWAP to a dream over here after that big move up into 1,060. Comes back down, does that wicking dance, where we wick below a level and then get bought up immediately. That should have been your kind of your tip right there. When you do this little wick into a key level, all of which the closing prints close higher, you typically end up trending up, and that's what we did here with $1,000 and 67 3/4 high a day. We're putting in higher highs, but marginally higher highs, marginally higher lows, but good move up. This could be a multiple day swing. All right, back to the future, because I got a beak wetter here at 16,511. But look, we quickly came right back down into 16.5, but we're getting bought up again. So this is that whole wicking dance that we're talking about, where we wick into a key level and then get bought up. So let's see what we do here. Very, very bamboozling. You know, you expected it to run once it made that move back up into 16.510, but right back down to 16.5. But every time it comes into 16.5, it's being bought up. And the wicks go below it, but the closing prints are above it. So holding on, let's see what we do this time around. Looking for a 16.5 hold this time around. I'm wrong if we break below this 16,484. So I'll have to give it a bit of room because I need that break of the previous low in order to kind of know I'm wrong. Right. So we'll have to wait and see how this one does. But so far I already got one little out there. Any other questions in the chat, guys, with respect to some of the topics today? I didn't really check with people last time. We've been talking about how to trade economic events like CPI, jobs, GDP, the like. And, you know, we've gone through that a bunch of times. If you want to go watch a lesson, we do it once an hour, so at 11, 12, and 1. But for any of those people who have watched and you have any questions, please put it in the chat, tag Adair and I, and we'd be happy to answer.
There's a super chat addressed to you from Nick W.
What's up, Nick?
Sharif Gabriel, thoughts on Rivian for trade and swing?
Ooh, we know that Neil was in Rivian today, or he was at least looking at Rivian.
I know Neil's always looking at Rivian.
Yeah, he was looking at it today. I know that for a fact because he was talking about EVs.
Rivian, yeah.
All right, well, here's a look on Rivian. Let's first and foremost chart. So we're going to put the horizontal trend line right at the previous day's close right away. That's my move. And then we're going to type in the ticker. That's usually not my move unless I'm on the show. All right, so what do we do here on Rivian? Very consolidative the past 3 days. 1, 2, 3 worth of consolidation. We had that big move up on the 6th, right? And the algo spike there kind of took us to about 1950. And that was the level we tested as well on the 8th, 1950. We've given up the ghost today, and we had, you know, we had been making higher lows since that big move on the 6th. But that got broken today. So now we've made lower lows, and we've really broken through that level. Where the support level lies is where this day started, this day on the 6th, which is that 1750 area. We didn't quite get there, Adair. We got to 17 3/4. 1775 is the low technically on the day. To me, I don't have a trade on here simply because it's already kind of developed. The only trade that I would really be interested in is a VWAP retracement and rejection. So it's obviously below VWAP. The attempts at VWAP here at around 1015 all were rejected, but since that time it hasn't touched it, right? So what I'd be looking for to see if it can reclaim that $18 level, 18 1/5 level at VWAP, whether or not it respects VWAP there or rejects it. Otherwise, I don't have a particular trade on Rivian that I would be taking at this moment just because we're in no man's land with respect to levels. So sorry I couldn't help on the Rivian trade, but yeah, not everything is going to be tradable.
Yeah.
Interesting here. D-Loaf is actually responding to Nick. Let's see what D-Loaf has to say. Nick, bounced exactly off 1777, the 200 SMA on the hourly. I do like the above 18 close. Under Phil's closure to there. 1760s 1760s 2 are nice fills. Reduce your risk 2 as, like I said, below 16.6 is ugly. Yeah, okay. Shout out to you. But it's not my kind of trade. If you can obviously maneuver into it, shout out to you, D-Loaf, for being able to see a trade like that. Scott Tomlinson, 30-year bond auction results. You're a bit 37 minutes late, my man. It came out at 1 o'clock, and we had a big move up on the future as a result of that. But sadly, you know, even though there was more demand for it this time around than previously, it was like one of the worst in a while. So historically speaking. So, you know, we'll have to wait and see how the bonds do in the future, but we already got the result today.
Yeah.
You want to have a look at quadruple C for Walt?
Yeah,
that was a big mover today.
Yeah, I have Salva right now up from William Randolph, so I'll just address this one quickly, and then I'll go to quadruple C. So William Randolph saying Salva, so that would be Cassava Sciences, has retraced from $32 back down under 28.
Bang.
Volume picking up, looks like it's ready to climb back up. Looks like a good one to examine. What are your thoughts on this name? My thoughts on this name are, I like this respect of this bottom at like that's 27.8 that you identified. I also like this wick below that was unfulfilled, because, you know, that's one of the biggest things too I have learned. I'm always talking about this, but I think it was a really good learning opportunity for me. Shout out again to Sharif. Like, if we have wicks down or wicks in any direction at a key level that are unfulfilled, that usually is a sign that either buyers or sellers are overpowering. In this case, sellers were trying to win, but buyers were like, nah, we're still playing, we're still winning. This is a really key level, because this is where we were seeing that consolidation just after open as well. And then we swooped to the upside, had a nice little swoop back down. Yeah, I would say I would be cognizant for levels if we're coming back up. I'd be interested in this 30-37 area, because that's where we kind of had some chop and churn earlier. 30-37 is of note. And then as well, that 31.70 area too, because that was their earlier top. So if I were getting back in a long here, or back, I wasn't even in a long. If you were getting along here, those are the areas I would keep an eye on. But yeah, really interesting look, William Randolph. Now it's time for quadruple C.
Oh.
So this one I was talking about during small cap recap. So now we'll recap it again. Okay.
Can I get some deets on it before you continue?
Yeah,
just the float, because I think with one of these ones we need to talk about the float. So it's larger, Adara, for a small cap gapper, about 45 million share float, which is not huge, but larger for small cap gappers.
No, I appreciate that. Yeah, because this one is kind of a gorgeous look on the day, I have to say. Like, look, it's kind of like a little snaky look. Instead of, I would call it an upward channel, but it looks kind of more like a snake. And I say that because we have like kind of the rounding, you know what I mean?
Roundy face?
Yeah, we had a roundy face earlier. Actually, I was going to say pre-market, basically we had a roundy face, then we swooped up and opened, made a new high, made another new high. I would say very good look on quadruple C, especially with your saying with regards to the float. I think it's a better look as well. Yeah, great name. Its actual name is C4 Therapeutics, hence this really apt ticker here.
Oh.
But yeah, so right now we're just kind of hanging out below this EMA. I would say as long as we don't make a newer low here at 230, it would probably be, you know, if you get a now valid trade, that would be my take on quadruple C. My thing is, though, I do not trade small caps, and I think that's just because maybe I need to spend more time looking at them. One time I did try to trade a penny stock, I think it was on the midday, and I couldn't even get in. The thing moved so quickly. So yeah, not my bag, but I do like this look. Something that is my bag, though, IK was mentioning Netflix in the chat, and I love Netflix. Netflix had that catalyst, which Sharif was talking about with regards to Disney, which is the whole that. You know, with regards to advertising revenue.
Netflix, yeah.
Yeah, Netflix up on the day, but look at this bottom. This 459.50
beauty
is kind of gorgeous looking. And then we did have slightly lower highs though, but now we kind of seem like this 462 high might hold. I don't really have kind of compression foot.
A little bit.
I don't know.
Yeah.
But yeah, I honestly don't have a clear enough view on this one, especially the way that Netflix moves, which is 0 to 100 real quick. Shout out to Drake. But the way this one moves does not give me kind of enough leeway with which to jump in, but I did want to pull it up because I like this stock. I have had it on my side chart all day. It just doesn't have enough momentum for me at this point.
You're getting some love here from the chat. The boss says, Adara, you go, Adara. You are a smart cookie. Love your observation on the wick. So proud of you. So fun to watch. Grow as a trader.
Thank you
that's
so much,
some love from the chat
or
there.
L-Boss. Thank you very much. I really appreciate it. Yeah, happy to be here, growing with everybody. And like I said, I always appreciate the chat support, Sharif support, everybody here at, you know, Trader TV and on the floor. So yeah, much appreciated.
I gotta tell you, like, I'm not one to throw around too many compliments, Barrett.
Yeah.
I gotta tell you, if I had the evolution curve that you have on trading, like I didn't improve with the speed in which you're improving. You know, I think it's because you're here and you're
Yeah,
around all of us. I was on my own for 2 years, so I think you're doing a hell of a job, and I think you should keep going because you obviously have an aptitude for this stuff. So
Thank
keep
you so
killing
much.
it. Yeah.
Thank you so much. And I was going to say too, I think part of it, yeah, is I am here, and everybody has been. I've been so grateful and lucky that everyone supported me. So I think that's a huge part of it.
Yeah.
And I think also part of it is I enjoy it. I like numbers.
It's fun.
I like patterns. I think it's really fun. Also, Eddie R in the chat, what type of cookie would you like to be? You know, like the confetti sugar cookies, or the ones you get at the bakery, where they're like, you know, the shortbready kind of cookies, and they got the little icing.
Okay.
Either of those. Probably nothing with any you know, nuts or chocolate, I don't think. But yeah, thank you so much for that. I really appreciate you saying that.
Well, if you want, if whoever this cookie person is gives you cookies, just remember that I love white chocolate macadamia nut
so
cookies.
do I. I know I said
Just
no
putting
nuts,
it out there.
but that's the one exception. Yeah, someone was like, "What cookie am I?" I don't know what kind of cookie I am.
Dude,
but yeah.
I can eat an entire. I can eat
White
like a
chocolate chip
dozen, 2
macadamia?
dozen. I can eat them on my own. Like, and I have no issues with that. My appetite will absolutely absorb all of those cookies.
I'm like craving it as you're mentioning it.
Yeah, I know. It's
like
nuts.
literally, I can feel.
You know the ones where I get them? Subway. Well,
I was just gonna say
yeah,
Subway is
those
good.
were
Like chocolate
amazing
macadamia.
cookies at Subway. Oh my goodness.
But yeah, sorry, we got a little off track. But thank you
Just
so
a
much for
little.
the love in the chat there, Al Boss. And thank you for the cookie-related praises. And thank you, Sharif, for that. I really appreciate that.
Absolutely. Look at this. All right, guys, we got a nice print up here on the future as we continue to trend higher. 16,515 and a quarter. I wet my beak at. I would like to break through this flat top-ish area, and let me show you on the 5. I think it's a bit better on the 5. I got to put out some more resting orders, but this is what I'm talking about over here. Look what happened last time we made it up to that 16,517 area. It was a big move down, held off VWAP, right? That's where we got short and we covered that VWAP. Now we're right back at that level again. Do we break through this time and start trending up into that 16,550 that we topped out at the algo spike on the release of CPI earlier today? Let's see if we can get that. You know, that'd be ideal for my position. Whether or not that manifests, we'll have to wait and see. But on our side is a series of higher lows here, not just starting over here at the low of day, but if you want to start over here, higher low, higher low, higher low, higher low. Do we get that move up? I sure hope we do on the NQ Future. Let's see. Oops, what did I just do there? Let's see what the chat is up to there for a second. Trend Sharif acting all magnanimous, knowing he retired everyone that set. Aw, come on, bro. I didn't retire anybody. Why are you putting it on me like that, man? I'm just sitting here doing my work. That's not nice of you to say, Trend. I disagree with that very much, very vehemently as well. I'm going to put here a beak wetter at the 20-point level at 16,520 and a quarter. If we can get a break through that level, I definitely want to wet my beak on there. But we're continuing to make higher highs and higher lows. I really couldn't complain about this trade. Because we dipped into that 16,550 area, and we had that whole wicking dance that I've been talking about for how long.
Yeah.
So, yeah, good luck
I also like how you got like top wick there. Like literally, like look at, you know, we're talking about top wick.
Yeah.
Well, but I mean like where you had the fill,
sure,
right? Like,
yeah.
Because I mean, I
resting
think,
orders, baby.
Yeah,
resting orders.
I kind of do that too, and I think part of that is inspired. I get really nervous too, but B, I think it's inspired by because I know you do that, and I think this is going back to what we're talking about today. Planning a trade for entries and exits is super important, not just in economic events. Although you know the volatility makes it more vital. I was going to try to make a volatility vital pun, but we don't have the brain power right now.
Okay, that's okay.
But we'll just acknowledge I tried. But then also, I think it also shows like here with this NQ trade as well, which is something that I would say is probably very sensitive to economic events like cough, the situation with the bond trade, right? So I think that's really interesting. Also, you know, because I love that you just used the word vehement. NVIDIA has vehemently broken above this 470-20 ceiling that we were stuck in for a good long while. It has like kind of a roundy face with sharp teeth here. And I say that because I mean, we had like kind of a curved motion, but there's some little spikies there. But yeah, so we had this decisive break above, like look how long we were respecting that 470-20 for. Like we were holding on tight to that thing in a vice grip, and then we swooped to the upside. I like this. I wish I'd gotten in on this. I would say area to watch. We kind of just, you know, had a crescendo here over that 470-80. That would be my first area to watch. Now I would be watching 472 and then 472.4 because those are where we had some low resistances there. Now you can do it yourself. You don't have to ask in the chat for people to do it
no,
now.
I used to harass Sean in the chat. Anybody knows that watches the show knows I was a viewer before I was on the show. And yeah, I know, right? We just wet our beak there, guys, at 16.5. 20 and a quarter. We took out that print. Now I'm sitting at 25s. Up we go on the NQ. Oh, baby. A couple of more outs on this bad boy. We took half the position we took last time. We took this bad boy short, printed on it, got out break even on the rest, got back in here on the long once it reclaimed 16.50, and now we're moving up. Let's see if we can get that continuity into 16.550. Technically on the day, the high is 16.548, essentially 16.5.5. So that's what I'm looking for there. You're obviously looking for some support by the Mag 7 to help propel the future, especially the NQ forward. Yesterday was one of those outlying days when we didn't have confluence between the Mag 7 and the NQ. Today, looks like that confluence is back. We'll have to see if we continue to pump up here. But yeah, there we go into 22s. I'm sitting at 25s. Fill me, baby. We're sitting there waiting. We're gonna hands off for now, Adair. Only two more on this bad. But yeah. The Chilean Nightmare says vehemently, right? He's like, yes, I do disagree. Okay. Did I spell it wrong? Okay.
Yeah.
Yeah. Oh, are we making fun of Ram? Oh, okay. Because I was teasing Ram on her spelling earlier today.
Yeah. I mean, but you know, NQ was definitely going up on a Tuesday. Shout out there. But yeah, I mean, we'll see. We will see how the market gets going here.
Yes,
also, someone asking you a question. Let me find said question.
Oh, is it Rock Doc?
It's Harry Lou, actually. Why do you prefer the NQ over the QQQ? If the liquidity is better, or is it because institutions prefer to trade futures?
You got the latter, not the former.
Thank you, Harry.
I care less about what retail is doing. I don't mean care. I care a little bit less about what retail is doing, and I care more about what institutional money is doing. They typically use the futures contract to hedge positions, etc., and that's the trade I want to be in. I want to be where the big money trades are. You know, you can have a look at this one way or another. You could say, well, you lever up on the Qs, buddy. Just add more shareage. Why are you taking the... It's just personally, I like the levels. I'm more comfortable with it. I like the 100-point levels, as you've seen me talk about many different times. I don't know if I haven't really done an analysis to see how it corresponds to the triple Qs or the SPY with the ES or whatever. I'm comfortable trading this. In fact, you know, once I get a bit better, maybe we'll trade the NQ, not the MNQ. So we'll have to wait and see. But we are absolutely pumping up here on the future, Adara. And we're moving up here, 16.530 incoming as we have about 10 minutes left on the show. I'd really appreciate a 16.550 touch here. We're about 20 points away from that right now as we come into 30. I can't take it out here as I only have one more out. Big move up on the dang future as we did that wick dance with 16.50. I'm going to call it the wick dance from now on.
I like that, the wick dance.
Maybe we'll have Fabian have like candles wicking and like dancing like the actual Japanese candlestick. It'll be like doing like a little bit of a dance. Fabian, I think that's a good idea.
I love
Fabian's going to kill me. He's like, bro, I don't have time. Right? Like, I've got things to do here, and you keep mentioning all these animations. Go make them on your own. I even asked him, I'm like,
I remember that. Yeah,
remember?
How do you make the animations? This was one morning. I was coming back to the desk from the big desk, and then I hear this conversation. I'm like, what is happening?
Right? No, I asked Fabian, I'm like, okay, Fabian, what are you using? What software program are you using to make these animations? So he told me, right? I'm like, if I ask ChatGPT to program it, will it do it? And I think we can. So I might try to bamboozle something on the weekend. Maybe we'll get something done and we'll try it out, see if it's really bad. Yep. But it should be interesting. Guys, excellent move on all the Mag 7 names so far. You know, the future's not moving on its own here. Look at Meta, absolutely pump up. High of days on Meta.
Meta's crazy,
Yeah, 331.45 high a day. Amazon also not at high a day, but look at that. Higher low, higher low, higher low, higher high. So upward channel very clearly there on AMZN. Apple, much the same look. We just broke through 194 on AAPL. much above that 193.18 close from yesterday. Google in the same spot, looking to close in on days highs at that 133 area. We're at 132 3/4. It's really been a story of TSLA going to sleep. Softies also almost at high day, higher lows all throughout there. TSLA has been the outlier here to the downside, but it's also just broke through VWAP Adara, so off that 233.87 bottom and now knocking on the door of that 236.5. So good recovery at least here for the moment on TSLA. Lincoln, what Sharif trading is called the futures contract, my friend. It is called the NASDAQ, the micro NASDAQ futures contract. That's the MNQ. I don't know what trading platform you're using, but they should have a futures contract. If you don't know what that is, give them a call, ask them, yo, how do I pull up the futures contract for the NASDAQ? They should be able to explain that to you. That is what I'm trading. It looks like a bunch of letters, but that's what that is.
Yeah.
Sorry. Rushaba Shah. In the U.S., NDX falls under 60-40 tax rule, where 60% of your profits are taxed long-term, no matter how long you hold. Not the same for the triple Qs. Cool. I know that the triple Qs are the ETFs, and ETFs have different tax rules. That's cool about it, but this is not really in that sort of scenario. Number one, we're not in the U.S., we're in Canada. Number two, when you day trade as a form of employment, you cannot look at it as a capital gains. It's judged as income. Now, there are ways around that in Canada about maybe trading out of your RRSP account versus your TFSA. I'm not going to get into that. There was a federal court of appeal decision in Canada that spoke specifically to the issue of trading out of a TFSA versus an RRSP, but I suspect that doesn't apply to many of our viewers, so I won't belabor that point there.
Yeah, I mean, I just also seeing Frank Jones here in the chat. 90 to 95% of volume is institutional. Day traders like us are just tagging along and riding their waves. Also, every time I see Frank Jones' name in the chat, I think about that rapper Mike Jones.
Mike Jones.
Mike Jones.
Yeah,
Mike Jones.
absolutely, me too.
So yeah, just wanted to shout that out. They're a great name, and also I really think what you're saying is really solid. Also, I have my eye on Airbnb because this is like, I think, about the importance of levels. Look at how well Airbnb has held this top at 140.20. This is crazy. This is like the tightest little consolidation. I was looking at this one for a short because we had a downgrade and there was nothing here to short. Like we were just so tight within the range. Also, Jeremy Beck saying who in the chat. Yes.
Yeah, Google it, dude.
Yeah.
Just find out.
But I can't tell if
you
it's
can tell
also
he's
a reference.
A youngin', eh?
But it also might be a reference because the Mike Jones. Who? Mike Jones. Like that might also be a reference to how he said his name. But
well, he would always start his song off by saying Mike Jones, right? Like that was like his little modus operandi.
Right, the one and only You Can't Clone Me. Yeah, people in the chat here too. But yeah, I'm not going to rap the entirety of that song. But
Alex Davis knows.
Yeah, I can tell. Yeah. Yep. But so anyways here, yeah, I mean this Airbnb is just a really interesting example of, and I really, coming back to what Neil was saying yesterday about Eli Lilly and how levels are really important, and when they show themselves to you, don't ignore them. And I really took that to heart. Like I was, really paying. Sharif came back, he's like, oh, like you're paying so much attention because I was staring at like the monitor when that whole Eli Lilly conversation was happening because I want to learn, right? And that's a stock I trade, and I think the lesson is really applicable with regards to this this top here. You know what I mean? Like this 140.20 level is so important to Airbnb. So yeah, just look at levels for whatever stock you're trading and look at how they're interacting and then kind of help formulate your trade from there. Also, I left Amazon too early. Still swinging on the vines to the upside here, and I left it behind. I should have stayed. We're pretty close to that 147 now. But c'est la vie. I didn't lose anything on this trade. Still in the sim and learning. But yeah, there we are.
I want to answer a very important question here. I don't know how to say your name because it's just a bunch of letters. Orpel, I don't know, LV2. You know who you are. He says, Sharif, I just started trading MNQ futures trading. Is it good to take what I learned from trading small and mid caps to these? I would say that there is to take a line from Obi, which is hilarious, it's distinctly different than trading small caps. I don't think it's the same style of trading at all. Personally, what I do is I wait for key levels to come in to the futures, whether the 100-point levels, I have this infatuation with the 100-point levels, but they keep presenting themselves as support and resistance, or I'm looking at previous day close or support and resistance on a wider time frame, a 4 hour, a 1 hour, and I like to get in and out off those levels. With small caps, you're really looking at, the bull flag forming and then getting in on the first pullback, looking for that continuation. It's not the way that I trade futures. I don't look for chart patterns on the futures. I'm not looking for the same type of thing. That's just my personal type of trading. And this whole wick dance thing that I've been talking about here at 100 point levels was shown to me by Arun, one of the better futures traders around, who was obviously, everybody knows who he is. And this is kind of like his thing. He's like, this is what he showed me when he was on the show. He showed me how to do this. So this is the way I trade it. I think it's completely, distinctly different from trading small caps or otherwise. But there may be some correlation, I would say, with the Mag 7 just in the way that they move because they're so closely related. Well, for the exception of yesterday, obviously, but they're so closely related. I don't know if I get in the same way on them, but there is more of a relation with the Mag 7 and the Fuge than there is with small caps.
Yeah, they move like it's really tight because sometimes, I mean, Tesla marches to the beat of its own Cybertruck.
Absolutely.
But with otherwise,
you just threw that in there, eh?
Yeah, I just had to. If you're into, I find if you're into mega cap trades at the same time as I made that questionable decision earlier on, they kind of react in tandem. So if one goes down, they're all going down, and you're freaking out. So just that's been my experience. Also, there is, I know we don't have much time, but a super chat, $5 super chat from Nick W. addressed to you. So I will let you look at that.
Yeah, sorry, I just wanted to look. I'll only be able to look at one, Nick, because we have 2 minutes left exactly on the show, so let's pull that bad boy up. I'm going to choose the first one, ADSK, Autodesk. All right, let's have a look at Autodesk. Come to the chart if you're able to, Fabian. Let's see what we got here on the half an hour to see. Ooh, that's a good looking chart right there. You can tell right away that this day here, November 21st, was earnings based on the volume and the algo spikes. We are now getting real close. Actually, yesterday we broke above the algo spike high. It's been higher highs and higher lows on this, so it's been trending, a multi-day trend to the high side. Obviously, the trend has slowed down since November 28th when it really started rocketing up. It was a bit of a U-shaped buy there, by the smiley face or the roundy face, as Michael Noss would say. But on the day, on the day, there's not much to say here, except let's have a look. What was yesterday's close? Yesterday's close was that just a smidge above 226. So let's put that level in there. 226. All right. We have trouble with that level initially because we break down, we get into that 224.25. We come back into yesterday's close at 226. We do the wicking dance there where we reject off, and then finally we breach it at around 10:30, and then we come back to it as a support level. So the previous day's close, super important on this bad boy. What I'd be looking here is to take, number one, the day's high, which is 228. We're not far below it now. And then I'm also looking at that 228.25. That's the high from yesterday. So look for possible resistance at those areas. But if we do get above and stay above them, look at them as support. So take the dip trades off there. That might happen tomorrow. Yeah. We'll have to talk about that at that time because it is 2 o'clock a day. So
we are done now. Yeah. In the immortal words of one Neil Roberts in the chat, fly market fly. We will see you tomorrow with the more educational content. Hope everybody learned some stuff. Same bat time, same bat channel. Brendan's at the big desk.
Hey guys, welcome in 2 o'clock on a pretty busy afternoon here as we get going once again to a market that is positive, but only just. If you're looking at the S&P 500 this afternoon after that dip following that 8:30 number this morning, if you missed it, we had CPI print this morning that came out exactly in line with expectations right across the board. The core number